love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, guys. Welcome back to another live stream here. We've got core PCE numbers coming and a market that is selling off once more. You've got S&P 500 down another 1% here to start the day. NASDAQ is down 1.6 as well. You get the Dow Jones down 0.6 once more. I mean, this thing has already been in free fall, so really, really sharp sell-off in a lot of the indices here. Another 1.3 for the Russell. The Russell has been absolutely getting smacked here recently. Gold's holding up okay. That's kind of good news for the metals people out there. At least the selling has stopped for now on gold here. You can see again what was this kind of huge drop for gold is bottoming out, at least for now. We'll see if that if those lows can hold here for gold as well, but seems like a lot of selling here. Pretty surprising stuff, guys. Usually in December we've been talking about this, usually in December we see a pretty strong rally in the stock market and just in general risk assets. But what I find interesting here is this year we might be getting something a little bit different. By the way, as the stream started, you saw our newest sponsor, DNA Funded. If you haven't checked them out, make sure to use our promo code A1TradingDF10 to get 10% off any of their challenges if you choose to go for them. Definitely worth checking out what they have to offer for those looking to get funded. So take advantage of that discount if you do choose to go with them. Okay, so gold has lost momentum. Yeah, it really has. I'm also a bit unsure if this market pullback is a bit unreasonable. Yeah, you know, I saw some comments. Do you think this is an overreaction? You know, let's go through it. I mean, today we have, in just a few minutes, guys, we've got core PCE numbers, and you know that's gonna probably be the last major market mover of the year. And I gotta say, I didn't think that this was going to cause a lot of volatility. But given that we have a very sensitive market right now, it's possible that this causes some serious swings today, especially if it comes in hot. If you get hot inflation reads this morning, gold, whoop, stocks, whoop, right? It's going to be rough if that comes in hot, specifically because Powell was so adamant about how they're a little bit cautious and nervous about inflation, admittedly. You know, so we look at something like core PCE, which gives us an inflation read a little bit closer this week than perhaps we usually would. So inflation numbers coming out in 10 minutes. Stock market is selling off before then. Volatility is up. The VIX is up 5%. I mean, VIX taking a shot here in the dark to the upside. We've been sitting at like no volatility, down in the low teens, 13 on the VIX. Jumped up real quick, guys, up to 28 on the VIX. I mean, that's a substantial jump. And this is the thing about the VIX and why I've been, you know, so adamantly pointing out the put call ratio being so low here recently has been a red flag, in my opinion. I pointed out this so many times, and look at what we've got. So here's the put call ratio. This is one of my favorite indicators in the entire market. If you are an index trader, make sure you're watching the put call ratio. It's such a powerful indicator. It shows you the volume of puts relative to the volume of calls being traded on the options market. Now, you might not be an options trader, but it's still very relevant to you. In fact, you might say, well, I only trade Forex, or I only trade gold, or I only trade whatever. This still matters. This is huge. This put call ratio is so powerful in getting market sentiment ideas. That's why it's under our sentiment and positioning tools that we have in the Edge Finder. We go to put call ratio, and what we've got here is everybody is feeling confident. That is until everyone flips sides. We're seeing a little bit of a spike in the opposite direction now as people are saying, uh-oh, inflation problems flaring up. Fed signaled just 2 rate cuts next year and even pointed out that their own measurements of inflation and projections were off. Uh-oh, oh no, sell everything. That seems to be the market's reaction. That being said, again, I'm not saying I timed this because I thought the put call ratio was looking frothy over here. So my timing was not perfect. But my warning about risk assets looking sketchy because everybody is feeling overconfident ended up being the right call. Pun intended with the put call ratio. Everybody was buying calls. I mean, I'm not picking on anybody. And if this is you, I'm not trying to make you feel dumb for doing this, but I had a lot of people telling me, oh, I'm long calls on Micron, on NVIDIA, on Apple, on Broadcom, right? They're long everything, long SPY calls, long Q calls, right? The thing is, you could feel the energy of everybody bullish. And when everybody is bullish, it's not being a party pooper to just say, look, if everybody's bullish, who's buying, right? If everybody's already all in, who's buying this market? So, I got really cautious on the markets and I kept a lot of cash heavy. That being said, I have a long position on the Nas. Market is closed right now. Market opens up in an hour. So you can see it did technically hit my Nas 100 stop loss level, but I'm still long the Qs. If the Qs are, at this point or lower when the market opens, I'll get stopped out. And that's perfectly fine. I told you guys my plan with this yesterday. This was an initial position for me. I'm more than happy if this market wants to keep dropping to give me a better entry on some of the sectors that I like. Hey, some of my sector stuff that I've been talking about, XLV, I couldn't ask for more today, right? XLV, healthcare is actually up 0.7%. We'll see if that can hold up, but that's, I've got some money parked there, so I'm feeling okay that I've got some there. I've got GDX puts that I've sold, so a gold position kind of, if gold can hold up in any capacity, that gives me a little bit of diversification, if you will, in the account. I'll take that. So, something to think about. No sound. I think that's you, my friend. I think everybody can hear me. Let me know if you cannot. If there's sound issues or video issues, just let me know. Yeah. Nick, this time last year, we didn't have an incoming president threatening tariffs to some of the major economies. I mean, that's true. I think although this sell-off, I wouldn't say is necessarily president related. I think it's very much Fed related, right? You've got this huge reaction. Just like, by the way, I wouldn't say all of the rally was Trump, right? For the end of the year stuff, we still just had, exceptional. At this point, you had to give the market credit for corporate earnings raising the roof. And at the same time, Fed was expected to cut. That Fed expected to cut part is what triggered this sell-off, right? It's not necessarily the tariffs by itself, or it's really inflation concerns overall. Do tariffs contribute to those concerns? Absolutely. So that is fair, but it's not the whole thing, right? We got to look at it holistically. So yeah, no, I mean, when we see the S&P 500 sell off like this, though, that is some real fear coming into this market that we have not had in a minute. I mean, that's the biggest sell-off, guys, that we have had since going back to September. We had a 4.6 drop in the S&P. Where are we at? We're at 4.3. I mean, guys, healthy correction territory is 10%. So we might just be halfway there. Halfway there gets us back down to 5,500 on the SPX. Now, I'm not short the market. I'm not betting against this market. I know better. This market is so strong overall. for now. We'll see if that can hold up. I do have long positions on, but I have cash at the sidelines. So here's my positioning. You want to know exactly how I feel about the market? I'm bullish, but I've got cash on the sidelines. What does that tell you? That tells you I'm kind of bullish. I'm not all in bullish. All in bullish. What does an all in bullish portfolio look like right now? Long NAS, long Russell, long Bitcoin aggressively. Did you guys see Bitcoin? I made a video last night. Is Bitcoin crashing? Can we get some yeses or nos in the chat really quick? Do you think Bitcoin, is this the top? Can we ask the audience? Give me a yes or no. 108,000 on Bitcoin. Is that the top for a little bit? Maybe let's say next 3 months. Next 3 months is the top in for Bitcoin. Type yes or no. I want to see you guys' thoughts. We got a lot of no's coming in. Okay. Next 3 months, though. Think about it that way. I mean, let me tell you what, guys. I am like somebody who is overall, I like Bitcoin. I think it has a future. And at the same time, I'm sometimes kind of a Bitcoin hater. Here's my Bitcoin hate for the day. Bitcoin offers absolutely no, at this moment in time, in my opinion, it offers no diversification to a portfolio. If you're long Bitcoin, you're just like triple X leverage long the NASDAQ 100. That's my opinion. Markets would tell you something similar. Let's practice. Okay, you want to practice? Let's look at the correlation of Bitcoin to NAS 100. Again, if you trade the Bitcoin market and you think it frustrates me so much. I don't know why this triggers me so much, but it bothers me when people think Bitcoin is this like standalone on an island, better than everything asset. It's not. It moves with everything else. Look at the correlation to the NASDAQ. It's very, very high, right? So if we take a 200 period correlation coefficient between NAS 100 and Bitcoin, look at how high the correlation between these two assets are. Very, very high. My point was saying that. Also, let me not miss the news. I need to set up. We're going to react to the news here. My point was saying that with Bitcoin is just know what you're trading. If you say I'm long NASDAQ and I'm long Bitcoin and I'm diversified, you're a dummy. It's okay. We've all been dummies at some point or another, but there's no diversification in that. You are just basically quadruple long the NASDAQ. So just be careful with Bitcoin, with NASDAQ, S&P. I mean, you can be bullish like I am, but you can also be an idiot and be too bullish, meaning you're positioning like a madman or a mad woman. Don't let that be you. Okay, guys, we got 1 minute to go. Core PCE numbers come out. Inflation is going to be really important here to this market. S&P 500 is, in my opinion, either going to bottom out on this value if you get something cool, if markets can relax a little bit. But if you don't, if you get hot inflation, we may see a Freaky Friday right before the Christmas week. Is Santa Claus coming to town, or is Santa Claus lost? Santa Claus rally happens supposedly on average. I mean, it does historically happen around December, around the week of Christmas. There's usually an up bump in the stock market. It's not every year and it's not guaranteed. Question is Santa Claus lost, or is he coming to town? We'll see maybe some hints of that in about 30 seconds. Guys, smash the thumbs up button on the stream if you haven't already. And let's go ahead and get ready for our breaking news. Here's a position for you. I'm short Bitcoin and long NASDAQ. So essentially you are short the NASDAQ because it's more, if your position size were equal, yeah. If you had 50% in short Bitcoin, 50% in NASDAQ, you're really just short NASDAQ. Okay, news is coming out here. We're looking for, guys, drop me the year over year number if you could, Lee, if you don't mind. Someone drop me the year over year number. I know it doesn't show in Forex Factory. It's like the one data point that Forex Factory really drops the ball on, core PCE year over year. If somebody's got that for us, let us know. Reaction initially is stock market is just a little bit higher. CAD retail sales, CAD core retail sales came in light. Core PCE was lower on a month over month index. 2.8% year over year. Fed was projecting 2.9%. So, hey, that's some pretty good news. Maybe Santa Claus is not lost after all. I don't know. Let's take a look. Stock market, NASDAQ was down at 1.8% this morning. So we're down 1.2. S&P 500 was down like 1.4, I think, this morning or something like that when I woke up. When I woke up at 2:30 a.m. and scrambled to the charts. Just kidding. I didn't. I actually slept through the night. It's beautiful thing about having cash in the reserves. It doesn't keep you up at night. You know what cash is. You know it's not going to gain or lose a bunch of value overnight. I am still, like I said, I've got some cash on the sidelines, cash reserves built up for a larger pullback if we get it on the stock market. But I also am long the NASDAQ. So I'm really somewhere in between. I want to buy Bitcoin so bad, but I just can't. Benny, why can't you buy Bitcoin? Dollar index is slightly lower off this number, guys. Makes sense. PCE coming in a little bit light. I am going to put a trade on here really quick, guys. I have been watching dollar Swiss franc for a pullback. This pullback is going to give me, I think, that entry. So I just went long on that one. I'm gonna drop that in the I'm gonna drop that in the Discord really quick. Give me 1 second to do so. This was just a currency trade I've been watching, waiting for a pullback on. Dollar Swiss is a long position I just took. Positive swap on that one is real nice too. Wouldn't mind holding that over the weekend. Dollar cost averaging approach, so no stop loss on it, but just a tiny position. So we'll see. Dollar index is lower here this morning, so could potentially even get, if we really follow through to the downside on dollar Swiss, I could actually get a bigger position built, which would be great. But I will take that initial position here. Just going to drop that 1 second for members. Okay, what are we looking at here? Okay. I got to do my write-up on it. Hold on. Okay. Stock market's bouncing here a little bit more. We'll take that. Okay. Doing my markups here. Sorry, guys. Whenever I have to take a trade, I kind of have to just put the stream on pause just for a second. Just going to take a picture here so that I can get this out to members. By the way, if you're not in our Discord channel, if you want to join us, we're taking a lot of trades right now. It is very active in the Discord. Come join us. If you're interested, we'll drop the link to speak directly to our support staff. We are standing by, happy to get you set up with a membership if you want to join. You can see all the trades. Yes, it is a paid group. Oh my gosh, it's not free, but it's worth the money. I'm telling you what, you can come join us. You can join our coaching calls. You can get access to all the trades we're taking, full breakdowns, analysis, and most importantly, we trade live accounts. We show track records. What more can you ask for? If you're gonna sign up for a service, you should require track records. You should be able to see what those people are actually trading and see their results long term. It's really important. Okay, so analysis. Let me just pull this in front of us here. So I just took this position on dollar Swiss analysis. Overall, dollar still looks strong with outperforming GDP stats. 3.1%. Did you guys see that? 3%, 3.1% year over year growth for the U.S. economy is monster. I mean, that's solid, especially compared to other places. Inflation still relatively high amongst G7 peers. Pulling back to support, willing to add at key levels. Sorry if my keyboard is really loud. I need to get a less clacky keyboard at home. I am trading and streaming from home. Usually I'm in an office, like we have an office, studio office, but today I'm at home. Okay, so I just took that trade on dollar Swiss. Been looking for an opportunity to get back in there. So I just took that trade. If you're in the Discord, I just dropped that. So you can find it under our Forex trades section. So go to Nick's Trades, Forex Trades. You can get the full details. I'll keep you guys updated on what I do with that. I may look to scale in or take profits if I can get a nice push to the upside. Was the keyboard loud, guys? I can't really. Sometimes my mic picks up everything, and sometimes it does not pick up anything. I'm sorry if it was really loud. It is what it is. Okay, so Bitcoin's bouncing. I mean, take a look at this. 90. We saw 92.5 on Bitcoin this morning. What do you guys think? I mean, Bitcoin is seeing some bounce back here. But just let me reiterate what I was saying before all the stuff. Bitcoin's correlation to the NAS is super, super high. Now, why do I say that so adamantly? I say that because I know a lot of people, a lot of new people to the markets. One of the most common mistakes is they think they're spread out a little bit in the markets. They think, oh, I've got some Bitcoin, I've got some NASDAQ, I've got some Tesla, I'm diversified. The problem is correlation in markets is something every single one of you guys needs to know about. Because if you're somebody who has a portfolio, I know some people just trade, Forex pairs, or they trade gold and they don't really have like a portfolio. They don't hold anything longer term. But if you're someone who does have a portfolio, meaning you hold some stocks, you hold some Bitcoin, you trade some calls and puts and things like that, or you're long and short Forex pairs, things like that. If you have a basket approach, you need to know your correlation amongst your assets that you hold. If you're just fully correlated across the board and the markets tank, everything you have goes down at once. So you have to be careful. Okay, so S&P 500, really nice little bounce back here. Let's watch this close, guys. I remain, again, cautiously bullish. If we get a close like this, that looks okay to me. If we get a close, I mean, today is so pivotal. If you get a close like this today, we're on bigger sell-off watch. Because if you get a close like that, I would not be surprised if we go down and test 5,700. But today's bounce off of PCE numbers makes a lot of sense. Hey, inflation may not be, the Fed mentioned some worrisome inflation concerns. Fed projected, guys, the Fed themselves projected 2.9%. Actually, specifically, 2.89 was what the Fed projected. So the market was expecting, 2.9. What did we get year over year? We got 2.8. So less inflation is a good thing for the stock market. Stock market can say, okay, that's cool. We had solid GDP. Inflation was cooling a little bit today. Could be worse. Let's just say that. If PCE came in at 3, guys, well, I think we're down here, right? But we're not. We had PCE numbers come in not too threatening. Market's bouncing a little bit. We'll take that. Dow Jones bouncing a little bit as well. Russell's up just slightly, 0.7. The Nikkei, Chinese stocks just doing absolutely nothing as per usual. VIX completely reversed on that, right? So you had VIX rising, and then dropped hard off of that. A little bit of uncertainty came out of the market right on that PCE number. Here's gold. Gold likes that a lot, right? Why would gold like that? Well, cooler inflation may cool off the dollar just a little bit. And if that happens, then gold is like, cool. Weaker dollar, good for gold, 9 times out of 10. Keyboard noises and something. Okay, good. Lee, I was just really more with my keyboard. If it's clacky to the point where you can't even hear me talking, that's where I was more concerned. But if it's not too bad, then okay. Look at that. Bitcoin back to 95. Nice bounce there. Dogecoin was down, I think. Look at that. Dogecoin was down 15%, 16% on the day. What an insane asset. Take a look at the dollar index, seeing a little bit of a sell-off here. Here's your 30-minute chart. Dollar index pulling back here off of those, sky high moves. 108.5 getting tagged. Pulling back here. Question is, do we find immediate bull support for the dollar or not? Let's take a quick look at yields. Are yields also coming down? I have a long TLT position. Yeah, we got a little bit of a bounce back here in TLT, pre-market trading at 88.5. So yields coming down this morning. That's a little bit of a relief to the market. Guys, I think one of the reasons stock market, actually one of the core reasons stock market is down, Bitcoin's down, gold is down, is this chart right here. The yields market rising, bond prices falling, right? So you've got yields shooting to the upside and starting to spook the market a little bit. I have a short position on Aussie yen. That's going pretty well. Shorted this thing. What was my entry on this guy? Aussie yen short position. I could pull it up on the Discord too. I've got 2 Forex trades active right now. I am short Aussie yen, long dollar Swiss. So Aussie yen got this sell yesterday around 98. Let's just call it. So 98, right around here. Went short the Aussie yen. Tagging kind of resistance in this area. Nice reaction to this area. Looking for a push lower on Aussie yen. This is a bit of a hedge in the portfolio. I mentioned, like I said, I'm cash heavy. I've got some long positions. This is sort of a hedge. I like that Japanese yen idea we discussed a few days ago. If you've been watching the streams, watching the videos, you know where I'm going with that. I've been talking about the COT data history that we pulled up here and, saw that in the Japanese yen specifically, we've had some interesting activity, right? We can pull up. By the way, guys, latest COT drops tonight. So we get the COT report, the latest data. I am really interested to see. Did big money start buying the yen more this week? We'll get that information tonight. So Japanese yen futures have been getting accumulated aggressively by institutional money. You had, again, long contracts being added, right? And short contracts being pulled off. So think about this. Institutional money aggregated on the commitment of traders data for the Japanese yen specifically. And by the way, this impacts everybody. If you trade indices, gold, the yen is really key to a lot of stuff. It tells you a lot about market sentiment. So big money seems to be building a long position in the Japanese yen. That's why I bought, I shorted the Australian dollar, bought the yen as a bit of a reaction to this. I'm dollar cost averaging. I'm not like all in at these levels, but I'm looking for some downside in Aussie yen. If that happens, then great. If it doesn't, then I'll just look to scale out. But check this out. So we've been having increased long positions in the Japanese yen futures contract, according to the commitment of traders data. This is big money making moves into the direction of long yen. So keep that on your watch list, guys. I mean, that's something that I've been keeping close to my chest here recently, because again, if you're seeing big accumulation, actually, I keep saying 3 weeks in a row. We've had 4 weeks in a row of significant increase in long contracts and closing of shorts. So big money seems to be building a long position on the Japanese yen, and I think it's worth keeping an eye on. So we'll see. For me, it's a bit of a hedge in the portfolio, but we'll see. Way too many commercial interruptions. It's actually been a minute. I think we actually need to do a commercial. It's been, if you're talking about YouTube ads popping up on your side, that's not something that we control. But speaking of commercial breaks, if you guys want to try out the Edge Finder, we're doing 30-day trials right now. If you're interested in that, you can apply for one. If you want to try out our tools and data, we'll drop the link here in the chat for you to sign up for that. Just apply. It takes 2-3 minutes to apply. It's real quick. And then you can try out our tools. We have so many sentiment tools. We have been getting, usually during this time, guys, our side, like the business side, is real quiet. View side dries up. People are away for the holidays. Not this year, and we are busy. We are busy. We've got people coming in here asking about our tools. We got people watching the videos. It's good for business typically when the markets go crazy, but it's also just a very exciting time in markets. And usually you get real quiet markets right now. And maybe we quiet down from here, but we'll see. If you guys want to try out the Edge Finder, get our sentiment tools, get our economic data tools, seasonality tools, start trading with some data. I'm telling you what, most traders just stare at a technical chart and wonder why it's so hard to trade. You got to have some insights. You got to have some look ahead, look at more comprehensive data than just a technical chart. In my opinion, this made a big difference for me in my trading. That's why we built so many elaborate tools to help traders look at sentiment, to help traders look at economic data like inflation reads. Like we're just talking about inflation here. Inflation had some cooling numbers from PCE this morning. By the way, we need to add PCE to the Edge Finder. It's about time we get some more stuff going on that front. But yeah, I mean, if you guys are interested in trying out the Edge Finder, I highly encourage you, take advantage of our trial offers right now because a lot of people have a little bit of extra time during the holidays. If you want to make 2025 a better trading year for you, if you've struggled this year, get yourself some data. So again, apply for a trial right here. Nick, how's your NAS position looking? It's coming back. So this is going to be confusing to explain, but I'm still long QQQ because the stock market is not open right now. So my stop loss order did not trigger. So I am still long NAS. I'm going to go ahead and clarify that right now as we speak. As a good reminder. Please note, I am still in this position as the stock market is closed. So my QQQ position has not been stopped out. Going to widen my stop just below today's market trading low. Okay. Thank you for saying that. So I'm still in the NAS position. I'll show you. Here's QQQ. It's definitely in a loss. We're down 8K on this position right now. But I need to adjust this just slightly. So let me do that. And we have Kenzo joining the call here in just a second. So let me go ahead and help transition this really quick. While I do this position, we'll go ahead and transition. We're gonna roll a quick break, thanking our sponsors, and then we'll be joined by Kenzo on the call in just a moment. Stay tuned. We'll be right back.
Shopping for presents this holiday season can be stressful. What to get for mom? What to get for dad, grandma, your uncle? It's all just too much. Lucky for you, A1 Trading has the perfect product for everyone on your list. Introducing the A1 Stock Box. Let mom keep up with all her favorite brands like Lululemon. Dad can keep up with his reading by checking out the latest headlines. And everyone knows grandma loves hedge funds. She can keep up with what her favorite hedge funds are buying and selling each quarter, and even see what percentage of their portfolios are diverted into what stocks. There's something for everyone in the A1 Stock Box. Available now at a1trading.com.
All right, guys, and we're back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great, thanks, and you, man?
I'm good, and it's good to have you back on the show. Really important week, of course. Major sell-off in response to the Fed talking about just 2 rate cuts next year and uncertainty regarding inflation, perhaps signaling that the Fed thinks inflation might be here to stay, might not be going away anytime soon. I want to get your thoughts on all this. I know we talk about indices a lot. Is this a dip buying opportunity on the indices, or are you staying out of the way with SPX, NAS, US 30, wherever you want to start? What do you think?
Yeah, for now, I was staying out, let's say, after the effect of FOMC, but I'm actually long, especially on NASDAQ US 30s. But 2 rate cuts, I think they are not really enough. It shows us that inflation might still go higher. Plus, the tariffs might put the dollar in a corner where it's going to be quite stronger. And I think inflation will be staying here quite longer. And also, it means the rates will be higher for longer. And that is not really good. So I think it will just depend on the market structure. I will just have to follow the news and just check the market structure. But it seems like inflation is still going to be higher for quite long, unless if these companies get used to this rate as they perform very well. We might find that they don't really feel any pain with that. But I think small companies like Russell 2000 and stuff, they might suffer a little bit. But yeah, I will just have to wait and see.
I'll tell you what, Kenzo, I like the NAS for what you just explained. The NASDAQ, as you know, audience members may or may not know, is a more concentrated index. It has a lot of concentration in the companies that we all know very well, like Apple, Amazon, NVIDIA, Qualcomm, or actually not. Yeah, Qualcomm, a Broadcom.
Yes.
There's many companies in there, right? So a lot of these giant software companies, these giant conglomerate, online internet companies, I actually like the idea of being long those ones, even though it is higher risk in some regards. Tech stocks can plummet very, very hard. That's why I do have personally some cash on the sidelines prepared for a deeper drop if it happens. But the NASDAQ has some companies in it that are a little bit less rate sensitive, right? As you mentioned, the Russell, go into that just for a second. What are your thoughts on the Russell? Would you be like Russell versus NASDAQ? Why do you like the NASDAQ more than the other ones?
I think Russell, it's good. Russell companies, as they are still very small, they are good if inflation or let's say rates are going lower so that they can easily borrow. But if maybe the economy is not very well, let's say the rates are higher, they're not going to perform very well because they're not going to have enough loans to develop whatever they want to develop. But when we talk about NASDAQ or companies which are in NASDAQ, their market cap is quite huge. So which means they can actually survive for quite long. They actually have some extra cash. They're quite big. For them to fail, it's unlikely. So which means they don't really feel the pain that much. And at the moment, I like the fact that I think 2025, we are going to focus on maybe products that are going to go along with AI. I think that will also make the market very entertaining. And I think that will push the market to go higher. We just saw the examples this year. The market was just going up with the likes of NVIDIA and the other ones. I think they will still introduce something that will go along with those AIs, because at the moment, there's nothing way bigger on the AI side besides ChatGPT. I think we're still going to have some serious products here and there, in which they're going to actually have to add revenue, and that will keep maybe Nasdaq to go to the upside.
You know what? You said something really interesting there. I want to just kind of elaborate on it a little bit and add something to it. So you mentioned these companies, right? The giant ones have a lot of cash at hand. That is a major, major advantage when cash becomes more valuable. And what I mean by that is that if borrowing costs, right, when interest rates go up, borrowing becomes more expensive. So as you mentioned, like the Russell is full of companies that are still growing, that may not yet have huge cash reserves. They need to borrow money in order to fuel that growth. But if interest rates are higher, their borrowing cost goes up and it cuts into the business's profitability. The thing about companies that have a lot of free cash flow is what we're talking about, that have a lot of cash on their balance sheets. They don't need to play that game. They don't need to, if interest rates go up, it doesn't really hurt them because they have cash at the ready. And that is why there are certain companies that are poised better than others. You know, in 2023 and 2024, the NASDAQ has had severe outperformance compared to the others, largely because of what you're pointing out. Interest rates were very high. People were concerned about inflation, continuing to make borrowing costs more and more expensive as the Fed tried to grapple with inflation. Meanwhile, companies that had a lot of cash on hand, for example, Apple, they're not as sensitive. I mean, take a look at Apple, even in this sell-off. Is Apple going down with the rest of them? Yes, but look at how well Apple is performing compared to, let's say, let's say a Tesla, right? Let's just take a look at Tesla, which is also a company that does quite well and has cash, but you can see how quick it dropped 11%. I like to pull up some of these stocks too, Kenzo. Here is Coinbase, yes. SoFi. These are growing companies, small companies that are very growth heavy, and you can see how quickly they had some pretty sharp sell-offs in response to inflation concerns rising. Anyways, yes. Thanks for breaking that down. What else are you watching? What do you think about gold here? Is gold getting more attractive or still not really something you're looking at?
Yeah, if maybe I can check the previous event that we had, like let's say PCE, yes, I will actually obviously look for a buy. But if maybe, unfortunately, I won't share my screen. I think my network is very slow. So
no problem.
If we look at PCE, yes, I will look for a buy. But besides that, I don't think it's quite attractive at the moment. I think it's because of the tensions here and there. I rather focus on maybe Nasdaq, USDTs. But if I go in on gold, I'm not gonna go aggressive. But to me, it's for now, it looks like it's gonna be bullish. But I think we're going towards year end, one way or another, it's going to reverse, especially when we already know that we're going to have very fewer rate cuts. So which means the dollar will be quite stronger for longer. So it's no longer attractive. Gold is not really long. It's no longer attractive like before. So
Sure.
the only thing that makes gold to be stronger is those investors who are in those countries where there is geopolitics and stuff, they still buying gold here and there, but they're not going to survive longer. So it means if maybe the dollar is going to perform very well, it's way much better for an investor to put their money where it's safer, which means is to buy gold, US bonds and stuff like that. So I think slowly, even if it recovers, it's not going to be for long. It's not going to be quite long. So we are going to see some sell-offs along the way.
Yeah, no, it's really interesting. I mean, gold, what was such a strong story for 2024 has really slowed down. And I think you just pointed out something really key about the sell-off in gold is, gold is still very sensitive to what the Fed has to say about interest rates. And we can clearly see that the reaction from gold was not great from what Powell had to say. Essentially, inflation is showing signs of not going anywhere. Somebody in the audience actually asked Jerome Powell during the press conference if they're now just trying to target for 2.5%. And, that was an interesting question. They said Powell basically responded to that with, no, adamantly, we are still shooting for 2%, and we're going to do what we need to do to get down there. And I think the market said, okay, so we are really not going to see rate cuts next year because we can't seem to stay below 2.5%. We came down to that area and have now been bottoming out. And I'm talking specifically about CPI. We've got that pulled up here. Why not show it? So CPI, came down. It was easy to get down that first, kind of several percentage points from there. But then what has been stubborn for inflation, where we've seen bounces, is right around this 2.5% level. And the Fed clearly is not happy with that because 2.5% may not sound extreme, but 2.5% can very quickly turn into 4, it can turn into 5, and that quickly starts to challenge, a recession. Unemployment could rise. So the point is, Fed seems adamant about getting it down to 2%, and that last leg might be a little bit painful, right? It might mean stronger dollar, as you mentioned, might mean keeping rates higher for longer. And that does not sound very attractive for gold. So, gold loved this environment where we were rapidly dropping in inflation overall. Gold was like, great. But then now gold is seeing the Fed say, hey, we're not where we need to be. This needs to come down. For that to come down, we have to keep interest rates high. Gold doesn't like that. So, very interesting to see. I know, of course, a lot of our listeners are very big gold enthusiasts, love to watch what's happening with gold. But you also mentioned bonds, which I thought was interesting. We'll see, where that goes. Dollar index trading at 108 now, pulling back a little bit. Last one for you that I had a question for you on, Kenzo's Bitcoin. What do you think about Bitcoin? Gold or Bitcoin down at one point here, about a 15% drop peak to trough. Is this a dip buying opportunity, or does Bitcoin have more room to fall?
I think Bitcoin at the moment is quite attractive. I think it's a good time, or let's say a good zone for another buy, even if maybe it can go even lower than that. But I still believe that we will see some very nice push to the upside. I think once Trump officially become a president, since he's been positive about cryptos, obviously, maybe it might be a month or two, we will see Bitcoin trying to go crazy. You see, I think we will see it going even higher, or may say other other cryptos. So yeah, I'm actually, instead of gold, I feel like I'll have to look for Bitcoin a little bit, because I think for this coming season or this year's, 2025, 2026, I think it's going to be quite attractive and most likely on the bullish side. But yeah, along the way, the market has to sell here and there. But at the when we check, I think it's going to be quite bullish. Maybe we might reach 150 very soon.
Yeah, no, I mean, I love it. The bullish call on Bitcoin from Kenzo. I mean, one thing I would add to that, Kenzo, is that you made the really important point of you think Bitcoin over gold. And I actually right now sort of agree. I mean, guys, there's a lot of risk in Bitcoin, and position sizing is really important because you can easily get yourself in a bad situation if you're way too long these things, because they can drop very far, very fast. But what Kenzo, you pointed out that I really liked there is that given the environment that we're in, unemployment is still relatively low. Inflation is not in a dangerous spot just yet. I mean, it could get there, but we don't know. It could also kind of trend back down, and you know, Fed doesn't know for certain which way it's going. But the point is, if you see, you know, opportunity here with Donald Trump being pretty pro cryptocurrency, Elon Musk as well being pretty pro cryptocurrency, there's a possibility that that continues to be a story into 2025. And I think we needed this pullback. You know, you had so much euphoria on this, and it still could continue to pull back. I like that you mentioned that this is a good level, not the only level, right? Because we may see Bitcoin head down to 92.5, 87.5. And, you know, people who are all in up here may be underwater, but people who have been waiting patiently with some cash on the side in preparation for a pullback might get a chance to get some lower prices. That being said, there is always the risk that this thing tanks way further than that. And you need to know what you're going to do if that does happen.
Exactly. Yeah, I think that will be a very good thing actually. But I think it's a bit obvious. We saw the time Trump won the elections, the market reacted positively with that. So imagine once he becomes the president, I think we will still see some nice moves to the upside, even though we might not really get those crazy moves. But in the long run, I think it's something that we can actually look at.
Yeah, no, it's a very interesting thing to watch. Very speculative, very risky, but has a lot of upside if, you know, Trump and Musk do make some sort of continued push in that direction. Really interesting stuff, Kenzo. What about you know, the dollar index? I know we haven't been talking about currency pairs as much on the stream lately, but do you have any thoughts here? Are there any currency pairs that you do have an eye on, or any yen crosses, dollar crosses? Any thoughts on the currency pair world?
Yeah, on dollar index, at the moment we are still very bullish, and it's been pushing up for quite some time. So the reversal that we have today is not really that much. So which means any pair that is going mostly the dollar, Canada, JPY, GBP, or Europe, most likely they are feeling the pain at the moment. Yes, they might reverse here and there, but I think going further, I think it's going to be, we're going to trade in favor of the dollar. So the other pairs mostly no, because I think the news that we have, or let's say economic news that we have at the moment, they were a bit crazy. So I was just focusing actually on Nasdaq. But I can easily see that the dollar is getting stronger, or it's actually mostly bullish against most of the pairs.
Yeah, no, I mean, it's pretty clear dominance here. And one thing I've been talking about that I wanted to share again today is look at this retail sentiment, Kenzo. This is really interesting. If we take a look at major currency pairs and put them by themselves for a second, look at how polarized the crowd is. Now, what we're looking at here, guys, is retail sentiment is taking a look at positioning according to several brokerages that report this. We've aggregated it into our system to build kind of a summary or an average. And what we see here for the currency pairs is that you have NZD, USD, Aussie dollar, Euro dollar, pound dollar, giving us a more contrarian bearish signal. And when I say contrarian, what that means is that the crowd is positioned very long. Basically what you're saying, where retail traders are trying to buy these pairs or short the dollar. And meanwhile, because of that heavy sentiment, we're getting some contrarian signals against that flow. So basically continued bearish ideas for these currency pairs, which if you've been tuned into the stream for a while, we've been saying this a lot. This has been a really persistent theme, and these currency pairs just keep going lower. Meanwhile, as you mentioned, dollar CAD 2 really strong right now, getting a bullish reading because everybody seems to be trying to bet against the flow, right? The dollar CAD. I had somebody comment on a video, Kenzo. They said the first thing we're supposed to learn as retail traders is to go with the trend. And yet retail traders do not do that. They fight trends like crazy.
Exactly. And yeah, that is the trick, because sometimes when they try to do that or trying to go against the trend, they feel like maybe they will get where the market is turning. But it's quite wrong or painful to go against whatever that you can see that, oh, this thing is flowing in this direction. Instead of going against it, it's way much better to flow with the market. As they say, the trend is actually your friend. So which means it becomes quite easier if you understand the trend and you try to follow the trend. You might not really win every day, but most likely will be in favor of the trend than to go against it.
Kenzo, I got to say, you are the king of trend following when it comes to the indices. I have, through the last year and a half, not seen anyone be more consistently bullish on the indices. Now, I'm not saying that in any kind of bad way. You have been like bullish because you haven't seen any true signs of real bear market reversals. And that has been one of the best calls that I've seen on the A1 Trading Show in the last few years, has been Kenzo's persistent buy the dip until it doesn't work on the indices. It's so silly. It's so easy, but it's working the last few years. That being said, I imagine, Kenzo, at some point, we will change that strategy. I know you and I have talked about this a lot. You buy these dips, but when the dip no longer stops dipping, when it starts breaking, that's when you have to start acknowledging, okay, we might be in a more bearish market. But I've seen you really be consistent, and that's awesome to be only long, looking for pullbacks and trading this bull market really well. Again, like I said, I think of all the people that I've had on the show, you seem to be trading the bull market the best. So congrats on all those awesome long positions. I've seen you, again, consistently be bullish and catch some really great plays on that side.
Yes, and it's actually addictive. Once you understand the trends, it's difficult to go against them, because you know that sometimes you might enter at the wrong time, but just because you are on the right side of the market, 80% of the time, the market will eventually come back and actually in your favor. But if you're going against it, most likely the market won't even come back where you entered, maybe in 3 months or 4 months. So that is way too bad. But if you follow the trend, it's actually like you might enter at the wrong time, maybe on the resistance area. The market might go, you might have some serious drawdown, but at least a week later, the market will be bouncing back in your favor. But if you go against that, maybe 3 months, the market won't even come closer to your position. That's way too raw, you see. So that's what I like about trends, because I know that I will be wrong, and most of the time I will be wrong, but as long as I'm following the trends, one way or another, I end up becoming a winner. So because it means I can hold trades with confidence, because I have to have confidence one way or another. So my confidence comes from, I know that I'm following the trend. Unless if the trend is changing, which is something that doesn't really happen like now and then. It happens, but not every week, not every month. So if it happens, it's fine, but maybe once in 3 months, once in 2 months. So that's fine, because it means now I'm lowering the chances of losing, you see.
Yeah. No, I mean, one thing to mention, Kenzo, I mean, this has been a phenomenal period for that strategy. Buy the dip has been just unbeatable for the NASDAQ here in the last 2 years. I just want to clarify to the audience 2 things. Number one, even in a bull market, your timing still matters, right? Waiting for proper dips, being patient, pullbacks. If you had chased this thing off of a cliff, it could have been rough, right? Whether you're trading SPX, US 30, I mean, US 30 has been really rough. You can really get yourself in trouble still chasing in a bull market. But then the other thing I want to mention is that I saw somebody say, I imagine that this is kind of a joke, Roshane or Roshane. I apologize if I'm saying your name wrong. NAS always goes up. It does until it does not. In 2022, it was a bloodbath for the NASDAQ. So if you were buying the dip in 2022, And these years are less often than bullish years, but the bearish years are so aggressive. So buying no stop loss in the NASDAQ during this time, if you had bought over here, I always make this point, to get back to break even, assuming you didn't blow the account along the way, which means no leverage, just holding the NAS like QQQ or, some form of just, unlevered NASDAQ, it took you 756 days. So you talked about a couple months. I mean, in this case, a couple of years just to get back to break even, assuming you didn't blow the account along the way. So it doesn't go up forever. We know at some point it will reverse. We know at some point there will be a bear market. But what I think is awesome is Kenzo's been very adamant about trading the environment we're in. And when that changes, we will adjust accordingly. So I think you and I share that similar approach with the NASDAQ. I've been pretty much only bullish on NASDAQ the last 2 years as well. And that has served us pretty well. It's been a really good source of pullback buys. We'll see if it continues. Maybe it does, maybe it doesn't.
Yeah, you're right on that. So another thing I think is just because we used to buy, sometimes you get used to that. And when that changes, sometimes you're greedy. You think maybe, no, it will change because it's been going up for quite some time. I think that problem is not also understanding the fundamentals, because it was clear that the rates were quite higher. And that's why we started to see these companies started to lose more, and they were not performing very well. And the rates, they kept going higher and higher. Then once they start to cut the rates is where we started to see them bouncing back. So if you understand the concept of that, I think it was going to be easier to see that, this thing might sell for quite long. It's the same now with the bullish momentum. It might take 2 years, it might take 3 years for it to have that a bigger sell-off. You see, it's the same as the last 2 years. So yes, along the way, we will have some dips here and there, but you might find that in 2 years, when we check, we can see that, this thing, it was actually on a bullish move, even though we had some reversals here and there. Because of the fundamentals, they are in favor of the stock market, you see. Yep. So also that matters most, not only the drawings, but if you understand the situation that we are in currently, you will understand why things are now moving this way or that way. I think that way it's quite easy.
Really, really good points, and important to follow the fundamentals for the stock market, because that can give you some clues as to when maybe it's starting to change nature. But again, factors generally speaking have been pretty positive for stock market. A lot of economic growth, rates have generally been moving down overall, though not so much recently. But yeah, I mean, still overall, some pretty hospitable environments compared to 2022, where it was just inflation going up every single week. And that was really scaring the market. We've really changed to a generally more hospitable time. We'll see if that changes in 2025. But Kenzo, I want to thank you for coming on. Before we let you go, let me just make sure everybody who's watching right now, do us a favor, make sure to go subscribe to Kenzo's YouTube channel. His YouTube channel is Extra Hot Forex. You can find it linked in the chat right now. Please go take a second to subscribe to Kenzo. Kenzo, thank you very much for coming on the show and sharing some really great ideas with us today.
Thank you very much, man, and also your viewers.
All right. And happy holidays, Kenzo. We'll see you probably not next week. I think right around Christmas, we'll take a couple of days off the stream. But thank you for coming on, and happy holidays.
Okay, thanks, man.
All right. Okay, guys, we've got our next stream host coming in. It's Forex James, a popularized, at this point, world famous on the A1 Trading Show contributor. He's here all the time. He puts in some great, valuable content for us. Even though he's not necessarily taking a whole bunch of positions into the end of the year, he's still here putting in the work for you guys. So we're about to see Forex James take over the stream. Before we go, just wanted to mention, if you guys want access to the retail sentiment tools that we offer, put to call ratio, seasonality data, economic data, do not miss the opportunity to try the Edge Finder 30 days. Link is going to be dropped here in the chat to apply for an Edge Finder trial. Check it out. See if it's right for you. It's a wonderful time. It brings me back to a couple years ago when I wasn't doing all the YouTube stuff as much. During the holidays, I would just backtest. I would just study things. I would just learn more things about these sorts of things. So highly recommended. Get yourself an Edge Finder copy during the holidays. Spend some time, pour through the data, get yourself ready for 2025. and let's have a great year next year. Make sure to try out the Edge Finder using this link being dropped here in the chat. If you're watching later, you can also go to a1trading.com and look at our trials page there. It's on the front page. All right, guys, real quick, we're going to take a break, and then Forex James taking over the show. Stay tuned.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. It's good to be back. It's good to see you all again. I hope you're all doing well. Hope you had a good end to the week as well. It's funny, actually, when I was just about to come on there, Nick said I've not taken many positions and, may have broken some more of my trading rules, but it's fine. So I just closed out of a mean reversion trade here on euro pound. Closed out just under 1% here, so around $300. Puts me at just under 10% for this month, so 11.6 last month, 9.6 this month. And I've still got some short-term trades here running. So I've got a position here on euro dollar. You guys should know by now, I sell euro dollar like a crazy man. Any pullbacks, I'm there to sell. So obviously during PCE or just before PCE, I put a short position on. If it hits take profit due to news, great. If it goes up, great. Just another chance to sell. And that's exactly what I did. Euro pound is here. So I'll just turn on trade history. So you can see sold here, got out for about 1%. And I'm still in my euro yen positions here. I also did the same thing here on pound dollar after PCE, took a short position on that one as well. But again, these are very short-term trades and I just can't say no to money. So stuck in a rock and a hard place, really, aren't I? What can I do? Bashi, Merry Christmas, buddy. It's good to see you. Amin, yeah, I'm good. How are you? Ball out, James. Nice 100 pip move from UJ high and gold long still running. How is gold doing? Actually, I've not really checked any of the markets today other than what I'm already in. Oh yeah, gold. I've got to say, ball out. You're on a bit of a roll here. You called the gold shorts, gold longs. Good stuff. I hope it pays out for you. Has anyone noticed that euro fell off since Macron's statement about arms embargo on 7/10 this year? Yeah, the euro fell off basically in August. I actually timed it almost perfectly. And again, I know I'm on here quite a lot, and I'm always talking about the euro. So I won't go into it too much. But I put a YouTube video out. It was roughly September, around this period, saying that I'm going to start shorting euro dollar, which I did. So I managed to basically just dollar cost average this whole move to the downside, which is where basically all of my profits came from. New Zealand dollar. I think very bearish on New Zealand dollar. It's taken a hit along with China and the Australian dollar here. So you can see took one short position that worked out here, planned another one that just didn't. It literally, this market gapped right at my entry point. So I just didn't get in, which was really frustrating. I was looking for a gap fill or some sort of pullback and we just didn't get it. So I started planning again for another short, didn't get it. I think we're now actually at quite a strong support level. Yeah, we are. So we're now at, it's probably not the ideal place to sell. Actually right now, don't want to sell into a really strong daily support. This is now a pretty solid double bottom in my book. So I would really be looking. Actually, I'm going to say looking for a pullback, but I've been looking for pullbacks and I didn't get one. So again, I could be sat here in a couple of weeks saying, "Oh, I should have just sold it." But yeah, I think just generally following the market dynamics, then a bounce off here would make sense. Happy holidays, James. Liban, happy holidays to you too, buddy. Paolo, hello. It's been annoying, but only buys. Yeah, I would not have liked to have been in the what do you call it, in the gold trade recently. Hey James, any idea why Swiss yen is flying despite Swiss rate cuts and JPY bullish consensus? Yeah, so where's the yen? Swiss yen here. So yeah, I mean, in theory, you would expect this market to be bearish, and I think we will go ahead and see that. Actually, the price action here on the H4 is actually very supportive of possibly some further moves to the downside. Now, this is, I'd say, it's a minor level of interest here, nothing too crazy, but it's still something worth paying attention to. We very clearly see an indecision between bulls and bears after a very strong move to the upside. RSI has just come out of overbought. So from a technical aspect, I actually wouldn't mind going short here, stop loss above the previous highs, and possibly just take profit at the recent low. As for the reason for the bull move, I'm going to be honest. I think it's more positioning rather than it being a macro-driven thing. And what I mean by that is it was basically 50-50 on whether the Bank of Japan was going to hike or if they were going to hold. And obviously they decided to hold. Now, some people might view that as a bad sign or not the right decision, causing them to sell the yen. Other people might be getting out of the yen to get back in at higher prices in order to sell, or sorry, to buy in the January hike that is pretty. It's expected at the moment that we will see a hike in January, but it's very early on. We've only just had the rate decision for December, so we'll see how that develops. But yeah, again, I viewed it as quite an obvious sign that they weren't going to hike because the Bank of Japan already said that they don't see a problem with waiting. So I think it's as far as I'm concerned, it was expected. Hi, James. If you do DCA, you do not use SL at all. You just continuing to add. Surge, yes. Essentially, it's not quite as simple as that. If you're DCA trading, you have to have relatively small lot sizes. Obviously, depending on what time frame you trade and how much capital you have and how much you're willing to risk, etc., etc. And you also need to be very, very willing to cut positions, and you need to understand when to cut positions and when to add into positions. So risk management goes a lot further than just a stop loss. That's kind of just, trading 101. If you're really looking into risk metrics and management models and things, it can get very, very complex. I put a tweet out, I think it was yesterday, actually, saying that I break basically every rule that retail traders are sort of told to follow. So stop losses, don't use indicators, use naked charts, don't bother with fundamentals, all that sort of stuff. I trade fundamentals, I use indicators, I don't use stop losses. Well, I don't normally use stop losses if I'm DCA trading, especially. So you just got to find what works for you. Marcus, happy holidays to you, my friend. Do I go live every day? No, I am just a guest here. Nick is live every day, almost, unless he's away or something's happening. But yeah, Nick is normally live every day with some other guests. I'm here 2 or 3 times a week, ish, give or take. It's probably the last time you'll see me this year, though, because I'm, I don't even know if the channel is going to have lives next week, because Christmas is on Wednesday. Unless the A1 team are just like elves that work and work and work. Hi, James. Just had a mince pie and remembered why I don't like them. Oh, don't blame you. Mince pies are disgusting. You know what? Actually, if I had the choice to starve to death or eat a mince pie, I'd rather just starve to death. They're the most vile, disgusting creation ever. Long on gold for today, though. I do actually finish today. Happy holidays, but I don't see you then. Lee, good stuff. I think gold definitely has potential to have a little bit of a correction, actually. It's seen quite strong selling pressure, actually, since, for the past 8 days. And it's more, in my opinion, this is more driven by dollar strength and obviously what the Fed has said and things, of course. But yeah, typically just looking at this chart, it wouldn't be a surprise to me if we do see some sort of pullback. Where to is the question. That's always the question. Where is price going next? My first port of call would be this 50% 618 level. So somewhere here would be sort of where I would either have take profit one or an alert or something, and see how it goes from there onwards. What do you think about the AUD? I think the AUD is really struggling. The Australian dollar is heavily affected by whatever is happening in China, and China is taking a hit. It's definitely not doing too well. So the Australian dollar is also, of course, taking a hit, similar to the New Zealand dollar as well, actually. So if we look at the Australian dollar against the US dollar, it's essentially just melting it. Actually, I'd put it now in the same range as the euro in terms of I just don't see any hope really with the China is really weighing it down. So in my opinion, Australian dollar is just going to continue to plummet until China sorts its stuff out. Do you mind showing how you do it to get an idea? Yeah, roughly. So we'll take euro dollar because this is what I've been most active in. I'll put trade history on here as well. So essentially, this is these orange lines are just Bollinger Bands. We've got an RSI down here as well. So this is where the indicators come in. Obviously, we're just looking for extremes in the market. So when the market is overbought, I'm selling it. So we've got an RSI overbought. We're at the top of the Bollinger Band. I'll sell. Great example is here. After news, we broke above the Bollinger. Even if we don't have a huge move to the downside, from these types of news moves, we'll typically have a correction. So I'm selling that, but also we've got the fundamental side of I'm just very, very bearish on the euro. I'm very bullish on the US dollar. So even if this position doesn't work out straight away, like you can see it didn't down here, I had quite a prolonged drawdown. It's no issue because I know the macros on the longer term is still in my favor. So that's basically it. It's essentially just a mean reversion. But obviously with some fundamentals mixed in there as well. I'm Muslim, so having a chicken tikka masala for curry for Christmas. You know what? I wouldn't mind a chicken tikka for Christmas. I'm going out for a curry tonight, actually. Not sure what I'll get, but if you've got any suggestions, let me know. But we've got a nice little restaurant near my house that we go to every Friday for a curry and a beer. Although I know that's haram, so excuse me. What's your take on New Zealand dollar position trade short? A position trade. That's tricky. So what I'm going to do actually is what you would always want to do before you place a long-term trade is you want to go to the Edge Finder, use code ELITE for a discount. Then you want to go to Carry Trade Scanner. And you want to have a look, are you going to have to pay to hold your position or are you going to get paid to hold the position? So what we're going to do is find New Zealand US dollar. It's not here. So hold on. Let me scroll down, see if it is here somewhere. It's here. So if we buy it, we won't be making money. But if we buy it, we'll have to pay. If we sell it, we'll be getting paid. So yes, it's a good idea to go short. Obviously, this is like step one. You're going to hold the position for a long time. So you want to at least earn some money while you're sat at break even or even sat at drawdown. So it's another way to make some profit from this trade. Secondly, is the problem of where price is. I'm not even going to go into the economics. I'm very, very certain that we're going to continue to see this market go to the downside. The problem is it's been very aggressive already. I wouldn't want to get into a long-term position where price is now. If I was going to go in for a position trade, I'd be looking for some sort of pullback. And again, it doesn't matter really where it is. If you are going in for a position trade, you have plenty of time to scale in and add on to your position. But yeah, I would maybe even do a long-term DCA. So you add in very, very small on every pullback and then just hold it. Hello, James. May I know how did you build your capital for trading? Yeah, so I've got two accounts. The one I've got here, the one I show you guys, is my sort of normal account, if you will. It's 20K, so it's just through compounding and deposits and hard work. That's it. Just get paid. It doesn't matter what you do, whether it's a 9 to 5 or you sell a service, whatever it may be. just put a percentage portion in every month. So maybe you cut out going to the cinema, or you cut out going for a certain amount of takeaways for every month, or whatever it may be, and then put that into your trading account, make some sacrifices if you can afford to, of course. And obviously, if you're profitable, it snowballs pretty quickly. And then I've got another account that is my family fund. So that's where I've got my family members and a couple of friends that have not technically invested, but it's a fund that I manage. Because in the UK, you don't need regulation to manage friends and family funds, as long as it's not over. I think as long as each person hasn't put in over 100,000 each, it's fine. There is a certain cutoff, though. I can't remember what it is off the top of my head. Do you think Bitcoin is going to fly because it seems to have retested 61.8 fib? So the problem, well, not the problem, but the thing I see with crypto is, and I'm not a crypto trader, this might be very, very wrong. So if I am wrong, please correct me. But it seems to be more retail driven rather. So for example, euro dollar, obviously we see a lot of corporate hedging and cash accounts and things and obviously non-speculative trading. Then we see speculative trading where there's trillions of dollars going around in FX markets. Whereas Bitcoin, from what I understand, it is mainly retail driven. So these technical levels, from a very basic understanding, might hold up a bit better. If you've got a lot of retail looking at exactly the same thing, it's a very basic tool, and they're all buying off that tool, then it would make sense. But again, I don't trade crypto. I could be talking absolute nonsense. I'm not sure where this 61.8 level is, though. Maybe from here. I suppose you've got quite a strong support. So maybe, yeah, if you are going to see some buying on Bitcoin, I would suggest it's probably in this area somewhere. We do have quite a nice H4 candle close here as well, with a wick to the downside, close bullish. Current H4 candle's bullish. Moving average is still bullish. RSI is oversold. So yeah, from a technical perspective, maybe. But yeah, it's still a little bit too high for me to be interested in buying. How do you know if you need to cut losses? Partly intuition, and partly you need to develop a risk model. So for example, if your total drawdown is X amount, you cut your newest position or your oldest position. Or if your initial position is in X amount of drawdown, then you cut it and add into a new position. Certain things, again, it can get quite complex. So it's really sort of an individual thing on your risk tolerance and all that sort of stuff. You're welcome to come to mine, James. How far are you from the Midlands? I'm currently near Durham. So I think Midlands is like Manchester area, isn't it? So I think not too far, maybe 2 hours roughly. The line chart helps a lot to see the levels, but I do need to do more studying on fundamentals. Yeah. Yeah, the line chart's good. It cuts out a lot of the noise, and it just gives you basically raw price, what price is actually doing, not doing like gaps and candles and all that sort of stuff. But yeah, it won't really affect your trading too much. It just gives you a bit of clarity. Do you trade FGMO or any other props? Serge, no, actually, I did have a phase one funded account, 100K. And it was sat doing nothing for the past month and a half. I got it up to about 5% profit. My target was 7%. So I was about 2% away from passing. Then we had the US elections, and I decided it'd be fun to gamble it because I didn't want to gamble on my personal account because obviously that's real money. So I gambled on the funded account is either blow or pass. But it didn't blow, but I lost like all the profit. So it sat basically at break even for a month and a half. And then yesterday, I decided to just go all in on a corrective trade on US 30, I think it was. And obviously, we all know how US 30s turned out. So that account is now gone. But it's fine. Funded accounts aren't really a focus of mine. It's more, I'll buy one like twice a year just to have a go, see what happens. Is the VIP Discord get a payment? I might want to join and get signals. Paolo, yes, it's $100 a month, but we do have a 7-day free trial. So if you don't like it, you can cancel before you pay anything. James, any chance you can show us your trading setup? I just put 2 screens, L curve desk setup. Yeah, all right, sure. Hold on. It's a little bit messy, but it's all good. So it's like this. So I've got a laptop here and 2 monitors. So there you go. Hold on, I just need to move the camera back now. There we go. Midlands is Birmingham, Wolverhampton, Coventry. Is it? Oh, I've lived my whole life as a lie. I had no idea. Anyway, yeah, there's not a crazy amount going on today, actually. We had PCE, but yeah, it's not really done too much. We had a small initial spike. Euro dollars calmed down. Pound dollars back to entry. Euro yen is doing all right. $55 profit. Nothing crazy there. Bashi, yeah, I don't know what the quality's like on here, but my setup's on my Twitter, so it's just Forex James if you want to go and have a look. James, how long have you been trading? I've been trading for, I think it's coming up on 7 years now, almost, roughly around that. What's your view on stock options trading? That's a whole other world that I have no idea about. The way I describe myself as a trader, it's like a stale piece of brown bread. All I do is I stick to G10 currencies. I read some bank reports, and that's all I trade on CFDs. Don't touch options, don't touch futures, don't really even do commodities these days. So yeah. So yeah, boring stuff. How many years did it take for you to become profitable? My challenge right now is that I can analyze the market, but no discipline to hold winning trades. It's a good question. So if your trades generally win on average, so if you're seeing the fact that you, for example, are placing a trade, and if you did hold it, you'd be profitable, or if you were holding all your winning trades, you would be profitable over the long term, then it's tricky. Because obviously it's easy for me to say, you just walk away from the desk or close the trading terminal, but that is all you can do. But obviously it's so much easier said than done. And to be honest, the thing that really helped me was when I first started to actually make some money in trading, it was like a buffer. So for example, if you have, let's actually go back to TradingView here. Let's say you have $1,000 in profit. I'm not as talented as drawing on here as Nick is, but hopefully you can understand. So you got $1,000 profit in the account, and you have a new trade on, and the stop loss, so your maximum risk on the trade is $200. What helped me massively was knowing I already had that profit buffer. So if I lost that trade, it's not actually going to affect my invested money, if that makes sense. It's just going to be a little bit of a reduction on the profit. So it's not, does that make sense? And that is what really helped me get over that barrier and hold trades and start becoming a little bit more confident. Because I knew, again, if I lost this $200, it's fine. I'm still in $800 profit. So again, that was just me. That's just what helped. So just building up that first bit of profit to act as that buffer was a great thing for me, again. So it might be completely different for you. Why Forex trading not interested in Bitcoin? Because Bitcoin is crypto. I trade currencies, different things. What's your view on Eurodollar? I think Eurodollar is going to continue to go down. I'm fairly sure parity is going to get hit. I would say we're going to hit parity. Actually, let's see. So 1.0. We need a date range here. So we also need to account for Christmas period and New Year. So obviously the markets will be a bit slower during that period. Maybe at the end of Q1 2025, we'll see parity. Obviously, it's a bit difficult to put a real time on that. It's not something you can really try and time perfectly. But yeah, generally speaking, I think Eurodollar is definitely going to continue its slide. But again, I'm not, this isn't me telling you to just go full margin, no stop loss, shorting euro dollar. You still need to follow your strategy. But I think the overall trend, it will remain down. Hi, James. I'm done for the day. Hope everyone has a nice Christmas. Henry, hope you do too, my friend. I'll see you later. Write down rules. Oh, actually, this was another thing. I didn't actually do it. Or I developed it, but I never used it. So what you can do is go to the MQL5 store and you can hire freelancers to make indicators for you. So what you can do, I'm actually not sure if it works or not, but what you can do is say, okay, I want this developer to make a EA. So once I place a trade, I can't do anything on MetaTrader for the next 30 minutes. So again, that can be very dangerous if you really need to manage the trade, but you could come up with some creative things there. Pay some developer $50 and it will kind of force you to follow your own rules. Paulo, gold is tricky. I would say overall, possibly a continuation to the downside. The problem is with gold, it's a fighter. It's not going to go down easily, but there is, in my view, not that much really to keep investors interested in gold. So we might be seeing some profit taking, obviously a rotation of capital as we've got the new Fed, what was it called? Well, basically what the Fed said last time. So yeah, possibly slightly lower on gold, but I'm never going to be sat here saying gold's going down to 2000 or we're going to see a huge drop on gold until I have a reason to say that. And right now I'm more flat to bearish or neutral to bearish rather than anything else. I did a podcast on psychology actually with a popular YouTuber. I focused on psychology first, not technicals. Yeah. Wing Commander, thoughts on yen crosses? Oh, I'm fairly sure we looked at this one the other day. If we took that entry, it would have been pretty perfect, actually. But yeah, anyway, I think yen crosses are really going to continue to the downside, specifically euro yen and Australian dollar yen. And although we've seen quite an aggressive move to the upside with a lot of the yen pairs, I just don't see it as sustainable. I don't think it's the start of a new uptrend, really. Again, I am really, really expecting that we're going to have a hike by the Bank of Japan. And I think we're going to start seeing that get priced in. And we might already be seeing that now. The yen is starting to make a little bit of a bullish move here today. So yeah, generally speaking, I think we're going to see some downside on yen pairs. Apart from dollar yen, I think dollar yen is probably or possibly the only yen cross that is going to actually continue its uptrend. And that's mainly due to the dollar strength. This will be very bad for my high impact new scalping position when I enter the trade and the market is moving like crazy. I cannot get out. Yeah, well, it depends, because if you're stuck in a, let's say, for example, you sold here and the market just moves against you, your risk should really account for something like that. Like when you're building a risk model, you should account for what is the worst situation I can be in. Obviously, you could say the market could go to zero, but that's not that realistic, really, unless you're trading like meme coins or something. But if you're trading FX, you should say, okay, the largest move on this asset for the past 10 years has been X amount of pips or an X percentage move. So how would I handle my risk if that did happen again? That's one way to go about doing that. Gold could stay sideways for some time. I'm looking at WTI long opportunities. Yeah, I would. Yeah, again, gold, no real opinion, to be honest. Oil, however, I'm mixed because we do have production cuts, but it's clearly not having much of an effect. We're still in this pretty long-term range. So this has been for 106 days now. We've just been ranging on oil. It's not really in a position where I'd want to take a trade. Again, I've been saying it previously this week, but there's also quite a lot of talk within the institutional side of things about renewable energies as well. It's facing, or it could be quite a big threat to the oil market over the next sort of 10 to 20 years. Obviously, that's a long time. I'm not going to base a swing trade now off something that might affect the market in 15 years, but it's something to keep something to keep in mind, I guess. Hi James, Hi James, how about any tips on how to grow an account, become a profitable trader? Sadly, there isn't any cheat codes really. I would say well, you've got two options, I guess. It depends on how invested you are. If it's all the money you can afford in your account, then obviously respect it, risk a certain amount per trade, develop a risk model, make sure you're holding trades, let your winners run, cut your losses early, etc., etc. Or, and I probably shouldn't be saying this on stream, but if you've got $500 in there and it's not a huge deal to you if you lose it, just try and flip it. Find a really, really strong setup. For example, euro-dollar shorts, wait for the next pullback, just scale in, just sell it. And this, again, I need to be very clear. This isn't financial advice. I'm not telling you to do this. It's just something I would probably do if I had to turn some money into more money. But yeah, don't blame me if you blow an account. But yeah, they're seriously though, trading isn't for people without money, and that might be a little bit controversial to hear or for me to say, but it's really not. The first rule of trading is capital preservation. The second one is obviously capital growth. So realistically, normal or professional traders are looking at about 10 to 20% a year. If you're trading with $500, $1,000, even $10,000, you may as well just stick it in the S&P. But yeah, I don't want that to be discouraging. Trading can be a very lucrative job, but again, you do need money for it to be lucrative. And I'm going to go circle back here actually a little bit. That another thing that really helped me trading was actually scaling up in capital. A lot of people say if you can't trade $100, you can't trade $10,000, or you can't trade $1 million. I actually really disagree with that. So when I struggled so much more trading, $100, $1,000 than I do now trading 30K. And the reason is because I actually respect the money that I'm trading. When I lose $10 on $100, who cares? That's the price of a sandwich in London. I don't, I'm going to spend that today anyway. I don't really care about losing it. So it's very difficult to place that stop loss and get invested in the trade and really try hard, because again, the money just is meaningless. So that's another thing, is actually the more capital you have, likely, as long as you have a system and a strategy and all that sort of stuff, of course, the likely you'll trade better. How are you going to end this year in total profit or in R&R or percentage? Well, this is my, where's it gone? Hold on, it's disappeared on me. Here. This is my FX book for this year. Well, actually, not even the full year. It's from September. So looking quite good. This was around 25K, made 6.5K on that. Up 27.31%. So yeah, pretty good, really. I didn't really want to go long on US oil, but the CAD is bad right now. Yeah, to be honest, I would avoid oil. If you're wanting to get involved with CAD, I think US dollar CAD is probably a great idea, actually. The US dollar's on a huge run. Took a bit of a hit today, so these pullbacks might be some good buying opportunities. So you got dollar CAD, dollar Swiss, euro dollar, pound dollar. They're all pretty favorable in my opinion. I did scalp PCE and my Wi-Fi went out once I entered Surge. I think it's a nasty spot to be in. I like that flipping tip, but great advice. Yeah, let me just say it again. That is definitely not financial advice. But yeah, I think again, it's a little bit maybe immoral is not the right word, but it's probably not the right thing for me to tell you to do that. But again, if you really do have low capital and you have no other options, I don't really see an issue with it. It's probably what I would do. But again, I have an appetite for risk, so it's different for everyone. You could trade prop firms. You can get cheap and build your capital that way. Patrick, that's also a great idea. If you do have a strategy that is able to pass prop firms, then absolutely go and do it. Build some capital that way. It's a very good way for low cap traders to actually start building themselves up. And you can also build a name for yourself. There's a huge community around prop firms. You're long CAD? Fair enough. If you're holding CAD for the next year or two, then fair enough. Actually, let's see what. Oh, nice. Okay, I might cut a position here. $300. Do we take it? You know what? I'll get out of euro dollar. I'll get out of pound dollar. I'm going to leave euro yen running. So today, let's see. History for today, we've made $566. Bang! That's Christmas paid for. But yeah, all good. There we go. So that's my trading done for the day. Euro yen's a swing position, so I'm going to leave that one alone. But yeah, other than that, that really is me done for the year. I promise. Although I think I've said that probably 10 times in the past 2 weeks. So this is just in 4 months, which is great. What's about the whole year? Serge, unfortunately, this is where the downside comes. Basically, the reason I have actually even got the MyFX book is because of Nick. So I actually don't know when I started streaming on here or being a guest on here, but it wasn't too long after. Nick said something along the lines of, if you're going to buy a service, or sorry, if you're selling a service, you should have a track record to prove it. Now, again, going back to what I said earlier, my bigger account is a family fund. I do not feel comfortable showing my family members money on stream. I just don't think that's I don't think that's an ethical thing to do. So I made this account to then obviously make public, so I could start backing up what I'm actually saying. But yeah, that's why it's only 4 months. But for the whole year, I'm up on my other account. I'm up around 60%. Actually, I think it's slightly more towards 50. I think it's like 52% or something. Do you think that's why a lot of retail lose money, because they don't have enough capital to trade sensibly? Harry, no, I don't think so. I think the main reason that retail lose is because they see fancy stuff on Twitter. They'll see a guy with no profile picture saying he has the holy grail, he has the key, he has, he counts candles in a algorithmic way and he makes 20% a month, or another guy making, tortoise soup, looking at Wix and saying you can make crazy money, quit your 9 to 5, get rich trading Wix. It's just a load of nonsense. It's absolute. If I'm not going to say that word on this channel, but it's awful. The stuff that new traders are exposed to, and the stuff is forced down their throat, and they don't know better. I'm not blaming the people buying these courses, because they don't know. But it's absolutely ridiculous. It makes me sick. Anyway, I'm not going to go down that rabbit hole. James, why not trade a prop firm? Because prop firms don't allow for the way I trade, especially where I could pass a prop firm in 3 or 4 days if I was allowed to DCA, but most prop firms don't let you do that. So it's kind of not really possible. James, any more bank report sources I can read besides OCBC, Daily FX, ING, Daily Outlook? The Credit Agricole, they win awards for their analysis. They send out reports. They're very, very good. Bank of America, very good. And Morgan Stanley are very good as well. What's your thoughts on low risk, high reward, high win rate? Oh, low risk reward, high win rate. I think it's good. That's basically what I do. My trades aren't massive profits. You know, you look. Actually, let me just try and show you the stats. So, because I can give you some good, realistic results here. Especially, obviously, this is for DCA. So if you're trading a more typical way, it won't look the same. But if you look, I was showing this yesterday, but this is really bad. My expectancy is $18. I mean, you've seen today I made $560. So it's a little bit, strange, but yeah, that's obviously my average. So my expectancy is to make $18 on a trade. However, I win a lot. So let me show you the win rate here. So my win rate is 67% out of 359 trades. So I think, yeah, the low win rate, the low risk reward, high win rate sort of strategy is probably one of the best ways to go. Obviously, unless you're someone more like, let's say Nick, who obviously has a fundamental understanding, can ride the trends, and obviously can go for those higher R&R trades. I do not want to show you anything. Just tell us we believe you, buddy. You're a trustworthy dude. 50-60% on a large account is amazing. What's the split? This is a live account, so I get 100% of the profits. And you shouldn't believe me. There's no reason. I could sit here and tell you I've made crazy amounts of money and not show you anything. This is why people get scammed, is because they just believe people. People aren't good. It's sad because if you're a regular person, you'd come into the trading space thinking, oh, these people are trying to help me. They're good people. They're only charging $100 to teach me all this stuff, or $500. And they're not, they're bad people. They are fraudsters, snake oilsmen. They've been around for hundreds of years. It will never change. So always ask for proof, even from someone as cool as me. I did see your video about how they manipulate the results. I think that's Nick's video about the simulated MT4 servers. But yeah, that's a great video. Bashi, DCA's dollar cost average. So essentially you add into losing trades. Do you see Donvo made a YouTube video, basically 15 minutes of waffle without saying once? I saw the thumbnail. I didn't watch the video though. I was going to make a reaction video, but I've heard it's very boring. And to be honest, I've got nothing else to say about the guy. What is he? I think he's 24. So I understand you make mistakes at that age. I completely get it. When I was 24, I was doing all sorts of stuff I shouldn't be doing. I mean, I'm only 26 now, so it's not even that much different. But I feel slightly bad for him, because obviously if you're that young with such a large audience making large amounts of money, you probably feel invincible. You feel, yeah, I can take on all this money. And then it hits and you lose it and you're like, oh my God, what did I just do? But obviously the other side is he is completely 100% responsible for people wanting to, I can't say that word, I don't think, but not, for people feeling very, very badly and losing money. So it's tricky. Anyway, let's move on. I keep talking about Donvo on this stream for some reason. He keeps coming up in conversation. I meant the split between your investors and family. I have around 20% of my own capital in there. The rest of it is family. Some prop firms are also scammy. Yeah, they are. Prop firms, again, people. Did you guys see the guy that made a rap song? It was like a love letter to Alpha Capital. And he said in the video he's never had a payout. I was thinking, these guys, if you made too much money with them, they're gonna completely ban your account and you'll be gone. They're gonna do, obviously this is my thoughts. I'm not saying this is true. I don't want to get sued. But prop firms aren't your friends. They're there to make money off you failing, and if you make money, they'll generally pay you. Obviously, if they're reputable, but they don't want you to make money. Whereas me, I want you guys to make money. But James, I think traders are more mature than the average person. Absolutely not. Definitely not. Have you ever met a floor trader in real life? I'd say they're actually more immature. The problem is what you get with a lot of these traders. You'll see obviously the old men, the ones that have been in it for years and years and years. The sort of CEOs and VPs and all that sort of stuff. They're generally quite mature, but the actual traders, they come in at 19 with their degrees, or 21, whatever it may be. They'll start making six figures very young. they'll have access to bars, strippers, drugs, other people that have also come into crazy amounts of money. Generally, they're actually not mature at all. And obviously, that's speaking generally. I'm sure they're not all like that, but that's just from my experience meeting a couple of them. But yeah, I think to be a profitable retail trader, you have to have your head screwed on, because you don't have risk compliance, you don't have a team of analysts, you don't have a portfolio manager, you don't have a CEO, you don't have clients. You are all of that in one. So yeah, you have to be a certain level of, excuse me, you have to be a certain level of intelligence or brains or whatever. Davinder, I have all of the bank reports, every single major institution I have access to. But yeah, you to get them through the actual institutions, you do have to be a client. Yeah, Bashi, I went on a bit of a tangent then, but yeah, you're right. I've just realized we've actually barely done anything on the charts today, so I'm sorry if you guys have turned up for some cool analysis and I've just sat here yapping for almost an hour. I'm curious, what is a fair split if trading family and friends money? That's a good question. So what you want to do is, obviously you need to first of all have a record. You need to be able to prove to them that you're going to actually make money and not just take the money and blow all of it, because that is actually so much worse than what other people do, where they just take random people's money. With your family, you can never escape. You can't even run away because they're your family. So obviously, first of all, actually be profitable. As for the split, you could do, what I do is every quarter, so every 3 months, I will email them all and say, I've made X amount. You owe me 25% of what I've made for you. So what you can do is either just send me that money, or I will take it out of your profit. And obviously you can start the next quarter with a slight 25% reduction on the profit. I don't charge management fees, obviously my family. So the only way I make money is if I do well on the account. James, Xmas week and New Year's week, what should we expect from markets? Bashi, don't even bother, buddy. Just get off the charts. You'll likely see maybe 1 pip every hour. Yeah, I wouldn't expect much. Thoughts on pound yen? Pound yen. It's actually taking a little bit of having a bit of a recovery at the moment. So what I would say on pound yen, this is quite a pivotal level, really. So if we do see another rejection continuation to the downside, that would be quite a strong confirmation to me that this market is going to continue to head down. However, if we start coming up higher, obviously if we break and retest, I'd be pretty sure that we're going to come and correct the pre-intervention move from July. I wouldn't really want to go long on this market. So I think the only thing I'd be watching for is possibly just another retest of this resistance level to go short. Other than that, I don't really see anything. Really? Yes. Markets, actually, to be fair, the markets have been very active. To say we're very close to Christmas. We've had quite a bit of news recently. Obviously, we've had Bank of Japan, we've had Fed, we have PCE today. So it's not a huge surprise, but it's more active than I thought it would be. So you just copy your trades to their accounts. And what about the risk on the investment? It's not your responsibility if you blow it. Yeah, it is, because it's a fund. It's not copy trading. So it's all in one account that I trade. So yeah. I do have copy trading, but that'll be coming in January. But yeah, okay. Okay, just reading a message. What is your strategy on have break and retest and support and resistance? You know what? It's actually changed over the past couple of months. it went from swing. So at the start of this year, I would have said I'm a swing trader. I use fibs and market structure to go long or short, and obviously following fundamentals. Then I switched more towards day trading. And now I'd say, to be honest, it's basically still sort of day trading, but it's more DCA than anything else. I don't really use candlesticks anymore. I'll more just look at the general price movement. If I want to go short, I'll wait for the pullback, I'll sell. If it goes up again, I'll sell again. But again, it's all based on the wider sentiment in the market. I'm not going to start selling something like, what would it be? Gold, for example, because I don't really have a reason to do that. Thanks, James. Also, Jan, for New Year. What should we expect? First 1 to 3 months. Is it normal? Yeah, Bashi, I would say sort of the third week of January, we could expect the markets to start coming back to normal, maybe even the second week. Obviously, the first week of January, people will still be off. People will be sort of calming down from New Year's. So yeah, I'd say sort of second to third week of January is when we might start seeing the markets get back to sort of normalities, if the markets are ever normal. Yeah, okay. So yeah, I think I'm done. There's no more positions for me to take. It's Friday, so even if I wanted to, I can't really take anything now. Obviously, Christmas is on Wednesday, I think. Yeah, Christmas on Wednesday. So even next week, there won't really be an opportunity to get into any positions. So I'll be done and dusted. So actually, let me just see. What am I actually closing out the year for? 28%. Not bad. Reached 10% this month. So that's quite nice. 10% months back to back. What is the amount I need in my trading capital to earn monthly income consistently? Random. That's quite a broad question. It really depends on, your risk reward, how many trades you take, what risk you take on those trades. So, I'd say if you are risking 1%, you aim for a 1 to 2. I'd say 100K would be enough. So if you hit a 1 to 2, that's $2,000 in your pocket. But then if you want to be bigger, I'd say $500,000 to $1 million would be ideal. That'd be a spot where you could take 1 trade a month, maybe 2, obviously depending on the outcome. But that 1 to 2 trades could be enough to support you for 1, 2, 3 months. So if you have a losing streak, you're fine. But yeah, I wouldn't suggest trading full time or trading as your only income is a good idea. I don't know any traders actually that trade and that's all they do. So for example, I sell, I've got elite traders that bring some money in. So even if I had a bad month trading, I still have some other money that is going to pay bills. I'm not going to, start getting the bailiffs at the door. So what is the agreement with them in case you'll blow the whole fund? I'm just asking all this because I'm planning on trading a fund as well. Serge, there is no protection because I'm not regulated. I'm not under any sort of safety net. So if it blows, that's it. The money's gone. What can you do? But it's like any investment. You invest in the S&P. If it crashes to 0, your money's gone. That's just the risk of investing. So you need to have a contract. And again, I'm saying this from the perspective of someone in the UK. But my contract basically says, I'm not regulated. I can't take over a certain amount of funds. Every quarter from the 1st to the 7th, you will have options to either withdraw or deposit. You agree to my profit share, which is 25%. And then obviously there's some other smaller details in there as well. I'm closing out around 250%, but that's a higher risk account. I mean, 250% is an amazing return. So well done. Thanks, man. I have short running on Euro Pound. Yeah, to be honest, I think Euro Pound has so much more room to the downside. I only closed it because, I want to get out of the markets. I've been saying that for a while now, but I am actually done with the markets for now. Here. So yeah, I took a short position here. So I was more looking towards getting a full correction of the move down here. So I was looking for something along these lines down to sort of 0.822. But I just don't have the mental capacity to keep it running, to be honest. Like I said, I'm going out for a curry and a beer tonight, and I cannot wait. We might do some shots, might go on the bar, might start dancing. Who knows? Could go anywhere. Anyway, guys, I've got about 5 minutes left, so I just want to say it's been absolutely amazing spending sort of the past I think it's probably been around 6 months, streaming on this channel with you guys. I see the same people and I see new people, and it's always great to interact. Nick's built an amazing community here, and I'm happy to be a part of it. James gonna get licked? Yeah, might do. I'm addicted to trade. I'm not addicted to trading. I'm addicted to making money. It could be anything. It could be gambling. It could be selling shoelaces on the side of the street. I just love money. Thank you, James. You helped me so much. Happy holiday. Marcus, I'm really happy to hear that, buddy. Have a good holiday. I think we have got someone on after. I didn't see who it was. Let me just double check so I don't mess it up. Well, I've got better at that, actually. I remember once I left the stream like 10 minutes early, and there was just, I felt sure there's nothing going on. Who have we got on? Oh, it's Chris. Okay, cool. So Chris will be on in about 4 minutes. Should we incorporate different strategy in one account, e.g. swing, day, position, same account? I do, but I'll be honest, I'll say that that's probably not the best way to do it. If you have more than one strategy, I would say it's actually better really to put them into different portfolios, and that way you can track them and you can track the metrics very accurately, so you know, for example, exactly how one strategy performs, compare it to another. Whereas if it's all in one portfolio, it starts getting mixed up, the metrics merge together, and it can get a little bit messy. So yeah, diversify your portfolios, not just your capital. Preparing for next year's trading, small account and practicing how I trade. Paolo, I'm sure next time this time next year, if I see you in the stream again, I'm sure you'll be telling me how much percentage you've made. The best thing about this channel is meeting a fellow Brit like you, James, who helps giving good knowledge and insight supporting trading. Very easy to talk to you. Have a blessing. Bashi, good stuff, bud. That makes me smile. I think I agree with you. The win rate gets messy. I do retail as well as SMC trading, so I do separate accounts. Yeah, good stuff. Yeah, I think it's probably the best idea. I don't do it again because I'm a bit lazy, to be quite honest. I don't like switching accounts and doing all that stuff. But if I was a professional trader, I was a real guy, I probably would. But yeah, let me just double check here. So I'm definitely out of euro dollar. That's completely done. Yeah, so it's just euro yen that's left. That's fine. Okay. Cool. All right, I'm set for Christmas. Okay. Let me just check something really quickly. I wonder what the next central bank is to make a decision. I know we've had Fed, we've had Bank of Japan for December, but I am not sure what else we've got. So the next Fed one is 29th January. ECB is the 30th of January. The next Bank of England is 6th of February. Bank of Canada is 29th of January. Bank of Japan is 24th of January. Reserve Bank of Australia is 18th of February. Yeah, Bank of New Zealand is 19th of February. And the S&B is 20th of March. Interesting. Okay. Yeah, the Fed's looking good. Dollar longs into next year, I think. Mate, do you watch football? No. I've never really found any enjoyment in football. Sean, have a good Christmas, my friend. No football, please. It's dead. Yeah, football. It's never been my cup of tea. Really, it's kind of I don't know. It's just one of those things. I just never really understood why it's exciting. I watch the World Cup because obviously it's a big sort of countrywide thing. Everyone enjoys that, going to the pub and having a couple of drinks. But that's more of a social aspect for me rather than anything else. Are you a car guy? No. When I tell you I'm probably the most boring person you'll ever meet, I'm not lying. I love finance. I love business. I love sleeping. That's about it, to be honest. I'm very, very simple. I don't want a lot in life. I don't actually have a lot in life. Damn, James, you're doing so well. I know. I'm sorry. We can't all be perfect, Bashi. Yeah, I'd be quite happy with, a very simple £500 car, just driving around, minding my business. I'm in a drag car. That's my DP. I can't really see it. It's a little bit too small on my screen, but it looks green, so that's cool. Anyway, guys, I think, hold on, let me just check. Okay, cool. Just need to make sure I wasn't holding up Chris. Guys, final thing. If you do want to join Elite Traders, we do have 7 days completely free, so you don't have to pay a single penny. You can join, and obviously if you don't like it, you can leave. That's fine. I won't take any offense. Actually, I will be really offended, but that's fine. Don't worry about me. I'll be all right. Bashi, you have a good Christmas and New Year too. I'll definitely come around for a curry at some point. I might just turn up at your doorstep one day. Don't be surprised if I'm wearing my girlfriend's hoodie. It's a sheep, I think, or a bunny or something, but it's so comfortable. Had to steal it because the UK is so cold. Anyway, final thing on the market. I am still looking for 110 on the US dollar. Euro, still very bearish. The pound, I'd say more neutral towards bearish. I don't really see any long situations, but I also don't really have much that tells me I want to go into deep shorts like I am on euro dollar. The yen will be interesting. If we can start seeing some small bullish movements, that might be because we are starting to, it might be because we're seeing market participants start to price in a rate hike for January. So again, pretty positive on the yen over the next 2 or 3 months, maybe even longer. £500 car. I don't know if you guys are trolling me or it's because you're American. Did I go over dollar CAD? I didn't go over dollar CAD, but we can do. Let's see. I would love to get long actually on dollar CAD. I still see, and I've repeated this probably for the last month, and I'm going to say it again because it's the last stream of the year for me anyway. So 2016 spike, 2020 spike, 2024 spike. So if you guys can do some quick maths, that's every 4 years that we're seeing a spike in dollar CAD. And each time we're seeing a move back to the downside. Now, the problem is there is nothing on the economics front that would lead me to think we're going to start seeing downside on dollar CAD. So that more leads me to saying that we've got a higher probability now that we're going to go up to 1.45. That's just the way I see it. So I would be looking to go long on any pullbacks. So again, I'm not really trading now, but if I was, I'd love to see something come down a little bit further, meet this 200 moving average and continue this movement to the upside. The issue is, does the dollar want to give back some of its gains to allow a move like that? I don't know. So we'll have to see. Oh, it sounds funny, I guess, saying pounds and dollars or whatever, being American. Yeah, it is. I do all my business and trading in dollars, and obviously I live in the UK, so mainly is in, you know, my personal life's in pounds, but yeah, everything I have to be constantly aware of what currency I'm actually, you know, talking about or working with, because it can get very confusing. I remember last year I issued a refund for someone. It was meant, I think it was $500, and I sent them £500, which obviously is a lot more. Well, it's more than $500, and he blocked me and wouldn't send back the difference. I was like, you know what? I guess I just paid for a big learning lesson. Indy, you too, my friend. Have a good one. Yeah, Bash, I meant 500 GBP, not LBS. Okay, cool. Just looking to there's anything final I wanted to leave you guys with, but I honestly can't think of anything. My brain is dried up. It's like a little raisin now. So, guys, I'm going to leave you because Chris is here. So, have a great Christmas. Again, you probably won't see me now until next year. So, guys, I'll see you next year. Have a great Christmas. I hope you all stay safe. Have a good time. Get some relaxing done. I'll see you very, very soon.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Friday. How we doing? Happy Friday. Put in the chat. Okay, sorry for running a few minutes behind, but we had another flush down. We gapped lower. We're trying to scramble back a little bit. Don't get excited about a rally here. I'm not. I think that the market's probably better off if we have any type of movement, like our high to this, FOMC plus a little fuel to the downside, gapping lower. PCE wasn't that impressive either. Nobody expected it to be. Look, I think this market is still due for another flush lower. Now, is that going to happen today or next week or the next 2 weeks? Probably not. And here's why. Low volume, limited trading hours. If the market puts in, the damage has been done, right? And so the FOMC move on Wednesday, plus a little bit of a retest of those lows, plus a gap lower today. I would say that this is probably our high to low that we're going to deal with here for the next couple of weeks. And if the market comes back in any way, you're going to have, if you want to call that a Santa rally, you can, because we're going up. But I don't think this Santa rally is coming back to hit all-time highs. Don't be surprised to see that there is another leg lower. Okay. And technically speaking, I kind of hope this happens, because that would be a lot more attractive to be looking to deploy capital early in 2025, as opposed to this thing pulls back here, right? And all of a sudden we're at all-time highs again. And this market did nothing more than like a little 3 to 4% dip. And everyone's been proven right of just buy the dip and just do nothing other than this market always goes up forever. Look, this little pullback, our April little pullback, I mean, it's right there with some of the biggest weeks we've seen as far as sell-offs go. I just don't have a lot of confidence that we're hitting all-time highs. I think that it was, again, we kind of go back to talk about the Fed for a second. Like, it was I don't know, like kind of it almost felt like a unscripted Jerome Powell on Wednesday. He got into tariffs, which I know when Nick and I were watching was unexpected. He spent a lot more time pretty much talking about how inflation is higher and stickier, and we made some progress, but it wasn't enough. We had softer employment, things are in line, but basically, here's why the market really reacted negatively to with FOMC. The market was already expecting like 3 to 4 cuts for 2025. And it was pretty definitive that after FOMC, or while the messaging was happening, the dot plot especially, that the Fed's looking at maybe 2 cuts. And so the market ran with that, right? All right. So anyway, that's where we're at. I hope we get some lower levels. I have NVIDIA, like, I guess I won't get assigned. If it's above 130 today at closing bell, then I don't get assigned. If it is, we'll see what it does. Let me just set a chart while I'm here. 130.25. See if it gets close to my strike. The ideal price for me with a ratio spread is the closer it is to 130. The closer it is to 130, but not actually closing below it, is my ideal ratio spread, where I get $4.57 per contract. But if it's below 130, I do take the shares, and I would own the shares around one. You can see it here. Well, I did have it 125. Right here, 125.43 be my break-even price if I own the shares. So I might not get the assignment on NVIDIA, and that's unfortunate. And then this is a credit spread out to next Friday. I don't know if this has what it takes to get up to 137 or 138 to get this a profit. I could also still maybe justify taking some shares and then putting on a collar trade, because if I sell a call and buy a put and it doesn't cost me anything, if the stock goes up, I get called away and I can make some money. If the stock goes down, I've got protection to lower my cost basis, which would be fine. So I might still, if I don't get assigned today, I might end up taking some ownership on this 138 by 137. So I'm trying to think, like, should I do that now? No, I guess I haven't been assigned yet. Try a different browser. I don't know. That's a TradeView question. I'm on Microsoft Edge. If Chrome is crashing on you, then try Microsoft Edge or Firefox or something different. Okay. All right. So I'll be watching that. I also had one of my hedges pay out today. This was actually pretty nice. My trade here, I don't know if I put it in. I know it's in the Pulver alert section. Let me try 608. Oops, let's go to the A1 trading. Let me try to type in 608. There it is. So I'm going to my Pulver alerts right now. The 608 by 590. I'm issue a closing order. I already put in a closing order on that trade, and it got filled today. So this is a reply updating the Pulver alert. So updated trade, SPY hedge. It was a 608 by 590 bear put spread. Paid 425 debit. Closed at 15.31 credit. Filled on Friday's open. Nice hedge profit. Okay, so that trade worked out pretty nicely. 15.31 is my closing price, and 425 is what I paid for it. So 1106 out of the 425 debit. I just made 260% return on risk. Obviously, I'll take that anytime for a hedge. That's pretty nice. Okay, market's getting a little bit more directional. We'll see if we are just finding, yesterday's lows, and if there's any rejection there, or if this market's trying to claw its way back into, chewing into this FOMC a little bit more. We'll see how directional today gets. So I'll keep an eye on that. What else? I'm still looking at a hedge on the QQQ. That one's out a little bit further. I should have looked at my, dang it. I should have looked at my SPY trades this morning. I had some out of the money puts. We take a look at this one here. So my SPY 1, 2, and 3 profit. It's given some back. Son of a gun. I was curious. I should have been looking at this morning to see where it was trading this morning. It doesn't matter. I mean, it's an out of the money hedge. It cost me what, $300 to hedge, and if it works, it works. One of them is January 3rd. The other one is January 17th. The other one is January 31st. I still have a Q hedge in. This one is not closed out yet. QQQ, where are we at? Here. My 533 by 510, we're trading at 515. I mean, this should have about $18 of value. It's showing about $11 right now. I'm up a little bit of profit. So I paid 525. It's not bad. Question is, like, do I like it enough to get out of the trade right now, or do I want to hang on to it? Let's see. I can close out the hedge, which I think for the next couple weeks, let me see what this trade's for. So can I get like 10? If I get 100%, maybe it's worth protecting. This is kind of nice. Like, I'm up a little bit today. Let me see what this hedge looks like. So if I close out for 1070 and change, let me see what I paid for it originally. 1056 and 473. I think I paid $5 for it. 1073. We're at minus 473. Did I pay $6 for this? 1056 and 473. All right. 1076 minus 473. Oh my gosh, dude. I paid $583. All right, so I paid $583. I'd be wanting to get like over $11, but we are getting a little bit of a clawback directionally today. We're kind of breaking out of this opening bell range. Let me see what my SPX trade is doing. I might just take the small loss on it right now. It has already blown through my stop loss. Well, that was pointless. Canceling that. I guess at this point, I'm going to embrace the full risk. So I put on a trade this morning. Here's my expiration. So my call side is being threatened a little bit. Do I want to roll? Maybe. This is something a little silly here, but let me see. Game time decision. I might do a quick roll. Where's my SPX? SPX. If I do a quick roll on the puts, if I do a quick roll here, I would close these out for profit. And then here's the expected move. I roll these, see, lows on the SPX. I know I'm just talking out loud here. Just give me a second to walk through a trade. So center price, roll this up to around 58, maybe 58.20. That's way up there, but yeah, 58.20. Grab another 45 to 50 cents in that roll. I'll keep it down to like I'll try that. So if I get, let me see if I get 50 cents out of that roll. So I should be taking profit on the one put and then rolling it again, 45 or 50 cents. See if I get 50 cents for this roll. 52 cents, try to get 45 cents. Ah, come on, man. Cancel that. Try to do another roll here. Put. Close. Okay, look at a roll. No, man. Cancel this order. There. Now I can roll this. Quick roll. All right. Again, where to? 58.20 to 58.25. So roll this up to 58.20. I'm going to take a little bit of heat here, but 58.20 to 25 should be able to get 50 cents. Try this for 55 cents. 50 cents roll. The bid ask is a little wide. All right, just got filled on a 50-cent roll. So let me move this over here. Update on the trade. Broker. Stop at 100% premium. Didn't fill. So now I'm looking at the full 5 wide risk. All right, so I'll keep an eye on this one. We'll see what price does. I'm still in for the expected move. Oh, no, you idiot. Never mind. I just fudged this whole trade up. Son of a bee. Never mind. Crap. Well, it's probably okay, but it is annoying that I did that. I didn't even pay attention to the expiration. That's totally my bad. And that is a lesson in why you don't roll 0 DT. So we'll see what happens, but now I've got to go back to the 20th. There's my trade for today. Call side could still be threatened a little bit. It's defined risk. It's not a huge deal, but I need to see price fade down a little bit lower. And anyway, that'll be a fun one to manage. All right. It's Friday. It's been a good week. Honestly, it has been a good week despite the crazy sell-off. I was positioned nicely for hedging. That's all good. The QQQ trade, I'm going to stay in this one a little bit longer. The SPY trade closed out, updated there in the Pulver report, or the Pulver report, the Pulver alerts. Where are we for the week? I think this is a dead cat bounce Santa rally. We have a high. The market did some serious damage this week to the lows. It didn't. I mean, is this it? Like the market came back in and found a bit of this election gap. Is this going to come up? And this is why I say it's a dead cat bounce. Okay. So if we have high to low and it took out this level right here, we didn't quite fill the election gap all the way. But if we fail to make all-time highs, who can tell me what this pattern looks like at the top? What does that pattern look like? If we challenge that low, left tip, center tip, that's a crown pattern or some type of head and shoulders or crown pattern, right? It's a topping pattern that looks like we could have market struggling to get to all-time highs and then come in and fill this gap entirely and possibly come back and find the moving averages that I have been talking about. Okay. So for all of my cash deployments, I'm still not ready just to say this is the trade. Like I want to get levels down here. I want to get levels, at or below the 200 moving average if it will do it. We're still 280 some bars away. I think I built that right here. We're 285 bars away on the 200 moving average. So it's, to me, either this is like coming up to test the highs and we're going to stall up here, or we're still going to let this moving average catch up the price and we're going to find it. And then maybe the market can justify going higher. But I don't think this market just goes right up to highs without having divergence and then somehow coming back in for a flush in January. It just, obviously I can be dead wrong. But like I said, I think that we're going to hit moving average before we hit all-time highs. And that's on, Meta, that's on NVIDIA, that's on the S&P, that's on a lot of stocks. I think we're going to have some type of pullback before, we get to all-time highs. So we're going to find out. All right, top down, let's go. RSP. So I got filled at 177.20. I'm not adding anything yet, but I'm watching. I've got a chart alarm set on my 200 moving average. Okay, all the equal weighted indexes like RSP and QQQE, they have been, actually, that's an interesting one. However, I will say this on the NASDAQ. Equal weighted NASDAQ is probably not as interesting to me as equal weighted S&P. Just because I don't know if equal weighted NASDAQ is, I mean, it should include like Mag 7 stocks, but it's just they don't give them, 10% as Apple and 8% as Microsoft and 5 or 6% as Google. It's like it's just not heavily loaded towards like Mag 7. But the problem is if you have unprofitable tech, QQQE is not going to be a great trade, right? So I do have some trades in, like I put a small position in QQQE and RSP. Dow is finally coming back for the first time in a while. It's still, I mean, no offense to the Dow, but we came back to fill this election gap entirely, okay, which is impressive. This is also, I think we have a bit of a topping pattern in here. I think the Dow is not done. If we have another flush lower, all I'm looking for is symmetry here. High, low, lower, high, lower, low. Find the 200 moving average. Find the structural support off this, April bottom and this August bottom. And if we can get to the 200, that's great. We come back to a little bit of structural low on a fake out or bear trap. That's fine. Give us a, what's a correction here? Okay, that's a 9% correction. Structurally, that's a 12% correction. I would be okay with that. 9 to 12%. A 9 to 12% correction in the Dow gets me into this area. So between the 200 moving average and my structure from April and August, I like that spot. So I'm going to box that in and put this in green because I'm interested in buying there. So that will be green there. So I wouldn't mind looking at a buy trade there. Okay, Russell also bouncing, came right back to this wiped away how many months, right? We had our election, pre-election, post-election rip. We wiped all that away. I don't know. I looked at this one yesterday. Like, could I take a trade on this? It was just a lot of risk. I was looking at the Russell futures, trying to look at a trade. It just didn't look attractive enough. So I'm going to stay out of it for right now. Russell growth looks okay. I don't know what happened. There we go. I'll take a stab at the Russell growth if we come back deeper. A 144 or 200 push down. I'll probably buy some IWY, dollar cost averaging there. IWX, this is top 200 value. I don't know yet. To be determined, and honestly, I'd rather trade S&P value versus Russell value for right now. If I'm trading anything small cap, it'd be small cap growth as opposed to value. VIX, all your volatility sellers are doing okay today. SVXY, I'm actually very happy that I got out of this trade when I did. Once we got to these highs, I closed out a 55 and 54 and 53 put for profit. Those were all placed in during this vol push that we had in late July into August. Now I'm sitting on SVXY with like $35 puts, which are out of the money. They expired today. Dollar index. I don't know. Don't fight the dollar. Could this be a broadening pattern? Maybe. I could see a little bit of accumulation in here on the dollar. I just don't see the dollar being bearish. Look, a pullback is fine, but I don't see the dollar pulling back necessarily below 105.50. So if you write something down on your dollar, the DXY 105.50. As long as we stay above that, I would be only focused on buying the dollar. Okay. And if this is the trade that causes a lot of pain and gets these Forex positions stretched out where it's like, man, I can't believe how far the dollar went. That's perfect because that means if you're patient and you're not getting smoked on the dollar right now, that means that we are going to have a monster trade on the dollar. And look, I will be the first in line to get ready to short the heck out of the dollar at a price level that's just so good. Okay. So why am I not taking positions now? It's like, look, I got a little stabs in there, right? I'm long Aussie dollar with a little small positions. I'm long New Zealand dollar. I'm not in euro dollar. I'm not in pound dollar. I think those are correlated a lot tighter to the DXY. If China picks up any slack and continues to kind of reassure the markets in Q1 of next year, Aussie could do well. Commodities could stabilize, do okay. I don't know. The carry trade situation, it's like the Fed's cut 100 basis points. The RBA is still holding tight at 4.35. The RBNZ is at 4.25. They're right there kind of with a negligible swap, right? There's no real positive negative carry trade between Aussie dollar, New Zealand dollar, but there's certainly strong sentiment around the dollar. It's pushing higher. Like I said, the tricky pattern on this dollar index would be this bit of a broadening pattern where we've had this nice run up and now it's just going to form some consolidation. Okay. But like I said, if we don't really make a firm break below 105, okay, if we're not below 105.50, I would not short this thing. Okay. So I just think that perhaps the surprise move in Forex would be that this dollar is still positioned to go up and we're going to get a magnificent short on this dollar at some point. But I do not want to be on the wrong side of this move trying to short the dollar early. Okay. So don't, right? My stabs are very small. I can stomach the Aussie dollar going down to 5,500 would be okay. The New Zealand dollar going down to 5,000, I'd be okay with that. I'm not saying I want that to happen, but I can stomach that. Those are small trades. I can manage a single digit, maybe 1 to 3% drawdown, and I can see where the dollar ultimately ends up taking me. Okay. But point is, let's keep an eye on it. But I think the dollar right now, as long as we're above 105, the dollar index is probably likely to stay bid. Okay, oil. Oil's the same thing for the last couple of months. I don't know what it's going to do. Is the floor going to break, or is it going to go higher? You know, this is also a bit of an inflation story in addition to geopolitical tensions. Oil just can't get a break. I think there's still that bear trap scenario where everyone gets faked out here and then it goes higher. That's probably my higher probability scenario, is that it's so well supported here that it just stays, but we could have a fake out. Unless there's some big change in supply and there's just a really aggressive move by, you know, possibly China, possibly the U.S. as far as production in the U.S., production in Saudi Arabia. You're still fighting against OPEC a little bit. But I just don't know. I don't know what oil wants to do. It's not something I'm interested in trading. I mentioned before, you know, do we just do a strangle on oil? Maybe that's the best trade. But by the time I'm thinking about this now, it's like, what do I do? How far do I go out on oil? I don't know. And plus, it's like it's undefined risk. Unless I did like an iron condor on CL. Let me see this. So if I go CL and go out to, I don't know, how much oil is are we going to get a lot of movement before, like, you know, middle of January? Probably not. Like that first week of January. Let's see what January 3rd or the 10th looks like. Okay, January 10th. This is just a random trade that I'm going to look at. But oil, if I were to sell like a $73, sell a 73. Let's just base this on the deltas. I'll go 15 delta. Okay. And I'll do a 15 delta on the put side as well. 15 delta put, 64.50. Okay. So this is why I wouldn't take the trade. I would risk $420 to make 80. Okay. And I'm not that excited about paying commissions. It's a futures trade, so I'm paying commissions. Plus, I've got my CBOE feed. I'm probably going after a partial profit, so maybe I make $40 to risk 420. It's a terrible trade, so I'm not going to take it. Anyway, so I just don't like it. There's nothing I'm going to do on CL or oil that I like. I did close out my trade earlier. I had a $69 by 68.50 bull call spread. I closed it out for like 52% profit. It was like a 52% of max profit, but I'd rather take it than deal with all this chop. Okay. Natural gas is still grinding higher. I'm not going to chase this thing. Just let it do whatever it wants to do. Gold, stabilizing, but still be prepared, right? Be prepared for an A, B, C, D on gold. I think we're coming down to 25 or 2,400. I'm way more interested in establishing new positions at 25 or 2,400, probably getting long in 2025 on gold futures again and adding positions on GLD. If it goes higher, okay, fine. One thing that gold is probably, I don't know, should potentially benefit from, like higher inflation should hopefully help gold. Dollar strength is probably the worst. That's probably the nemesis of gold right now. If the dollar gets stronger, gold is likely going to head lower. So that's one trade-off, is the dollar index getting stronger and the dollar pair is getting stronger. Gold is probably facing more headwinds, right? Am I doing anything on either one? Nope. I'm just going to wait for the dollar to get me better positioning, and I'm going to wait for gold to hopefully line me up for better buy trades. If gold lines up here, great. I'll like buy trades there. Let's see some heavy bidding. Let's get back to all-time highs. If the dollar runs and gives us a super attractive level to sell it, then we look for confirmation and we have a great trade in 2025 on the dollar. Okay, gold, that's GC futures, GLD here. Credit spreads are in. That's out to 2026. I bought some additional shares. No big deal. Silver, what? This better be a bear trap. Coming back in to hopefully find some support. 200 moving average bounce. Hopefully we have that on silver. It's still very well supported at 26, but again, dollar strength. This is what I would like to say on silver. If silver goes up towards this level, challenges that high, I'm going to look at another accumulation zone for silver to try to get back up to 36. Right? So I want to see silver hopefully at this 200 moving average get back above firmly, work its way back up to these recent intermediate highs, and then any pullback here looking to add positions. I'll probably add some more SI futures or SLV credit spreads. Okay. All right. Bitcoin. Bitcoin had a little wick today down to 92. I said 90 to 80, right? 90 to 80,000. So 90 to 80. This is still my buy zone. So that's it. It's a lot of risk on, risk off. I mean, we've had a heck of a run on Bitcoin, obviously hitting the 100,000, hitting symmetry. If we have a high, low, lower high, lower low, which I hope we kind of do, then maybe we settle back into those levels I'm talking about. 90 to 80, and I'll add some exposure. Again, dollar cost averaging type trading, nothing crazy risky. Maybe an option trade on IBIT, maybe a partial ownership again, just throwing in another like $1,000 at it or something. That's it. BITO, glad I got out when I did on the call side. Now it's all cash secured puts, which are fine. I do own some shares of IBIT or BITO as well. IBIT getting a pullback, but I've already got trades in 52 and 51. Own the shares. You know what? I'm pretty happy with this. Look at this was the measured move. I measured symmetry on BTC. If it moves to 107, it did, and this is exactly where IBIT topped out as well. So there's a powerful example of symmetry, everybody. You measure moves, you calculate the percentages, and lo and behold, you get. I mean, that's pretty decent, right? We hit the exact symmetry level on Bitcoin. We hit the exact symmetry level on IBIT. This isn't like I just drew this now. It's like I've had this on my charts for months. So as far as profit taking, as far as measured moves, as far as getting to certain levels, it's kind of nice to see that happen. Okay. All right. MicroStrategy. Clawing back a little bit today. I've got a small position in on MicroStrategy at 372.50. We'll see. You know, this is essentially, like I said, trading Bitcoin. I'd like to see this. I mean, I measured my symmetry on this downward move. So A, B, C, D. If we get that, if we have a shallower pullback, then we're taking like this low and we're pulling back maybe like to a 127. This could be some type of like reversal pattern. But we'd have to see. I think we'd have to see Bitcoin hitting all-time highs again for MicroStrategy to even have a chance at all-time highs. Because when we hit this area over here, when MicroStrategy hit these all-time highs, it was way ahead of Bitcoin, right? Like Bitcoin wasn't at 100K when this thing was already making that run to $550. So it's just more volatile, you know. And if we get back to 107, 108,000, is MicroStrategy able to get back up to its highs? If it is the case, then I'm probably just going to take some profit. Take some profit there. That's going to be like a 60 to 70% gain. I'll take it. Okay, coin, hanging in there. I closed out. This is a 220 by 230 bull call spread, as well as a 111. Don't fail on me too badly there, Coinbase, for the next couple of weeks at least. Ethereum, nice rejection off of the kind of pullback level pre-election. That's a nice little bounce. EETH, same thing, like hanging in there. I've got some expirations. Let me check my EETH really quickly. EETH. I'm going to check my expiration dates. So EETH, January 17th. So 60 by 45, 45 by 40, 40 by 35s, bunch of option trades. Essentially, my line in the sand is $60 by January 17th. So hopefully we're okay there. Copper, nothing. Japanese yen futures, not quite at the level that I want yet, but I will be watching. This is a spot that I wouldn't mind looking to get long. Okay. It's going to be a defined risk trade. You know, I don't trade the yen much on currencies because I hate them, but I will trade Japanese yen futures. The Nikkei, still choppy, still garbage, right back in the middle of all that that fallout from July to August. Just watching. FXY is trading the Japanese yen. EWJ is trading the Nikkei. This one's down a little bit. So down about $5 a share on that one. I've got another dollar cost average level at $61. Maybe that gets filled. I mean, it's funny how this is not the Nikkei. Like I traded this because this one takes out the bottom 15% of the Nikkei 225. And I'm like, well, I mean, if we have a little bit more flight to quality with taking whatever it is, I mean, you take away 15%, you have 85% of the Nikkei. Hopefully it's okay. DXJ, that's another one. DAX. We had a decent pullback in Germany. We had that big capitulation move pulled back. This is a 50 moving average. I don't know. Keep an eye on this one. I still like deeper pullbacks. I mean, if you're looking to get long in anything, I'm just going to wait for deeper pullbacks. I hope we get them. You know, if I'm wrong, I'm wrong. Maybe I'm too patient. Look at this rejection on the FTSE though. Oof. So that level. Maybe this is still a range trade on the FTSE. Maybe. We are certainly flirting with some major support breaking though. So I don't know. The further we get on the right hand side of the trend line, if we break that floor, like the FTSE could be heading way lower. Not yet. It might still hold up. If this gets back above here and has some thrust, maybe. But if we're a little softer in the U.S. market, I don't see us getting a lot of gains out of Europe and Germany, gains out of the UK. I mean, I don't see a lot of the global markets all of a sudden doing super, super well, despite all the readings we've seen, like the Case-Shiller showing that the U.S. is valued just extremely high compared to Euro stocks. Globally, it's like 63% of the total market cap in stocks is the U.S. right now. So I get it. Like if the value investors are looking for non-U.S. plays, but it's pretty much been a failed decade of trying to do that. So anyway, interesting support on FTSE. I have not traded this. I just thought over in this area is like, man, I really want to put in a defined risk like Iron Condor or Strangle. I didn't like some. I still haven't looked hard enough to find an ETF to trade, so I haven't. Argentina, decent pullback. This is good. This is a country I would consider being bullish in 2025. I just want to see, can we get some better levels? Pulling back to the 50 period does not make me excited. So is it high, low, lower, high, lower, low, come back into a little bit more attractive zone, come back and find some type of structure in here, then I could get long Argentina. So that's what I will watch for there. What else? China, still pretty sideways. And like I had mentioned with some of the technicals here, with this big thrust up on the HSI, if this is A, B, C, D, or building this kind of support zone, so we have a potential like head and shoulders, potential head and shoulders. Now, the proof is in the pudding, right? If we have this as a head and shoulders for HSI, is this able to find its way back up to the neckline and, in fact, confirm and break the neckline? Because if it does, then yes, China looks a lot better moving forward. Maybe this is trade in, Q1, Q2 of next year. It's going to take some time, but if this HSI can start looking higher, then I'm sure the stocks that I look at for China, it's like 6 of them, but I'm sure they're going to start looking a little bit better. Okay. EWZ, this is Brazil. It's dirt cheap. I mean, we're back down to COVID levels now. So I don't know. I think I bought 100 shares of EWZ. I don't necessarily want to double down on that, but it's hard to argue with like 2020 lows and 2015 lows. So I will probably, if this chart alarm goes off, I'll probably look at a buy trade around like $20. Okay, there is a pretty decent dividend to it, although this has performed like garbage for the last 1-3 months. Terrible for the year and down 50% for the last 5 years. So I don't care about a 9% yield when we're down 50%. But it's beat up. It's a value play. I mean, it might be just throwing trash, throwing money in a dumpster, or it actually does become like a reasonable trade. I don't know. So this is probably more of a commodity play than anything else. I just think that there are some attractive levels in here, and I'm curious to see what the rotation looks like. If we do rotate out of like all things tech, if we're going to be restrictive, is there a deleveraging coming in the markets? I don't know. I mean, it's just a weird sentiment change since the election, right? Right now, it's like everyone is just so optimistic about like how much better 2025 is going to get. Maybe it is, but does that mean there's not risk? Does it mean there's no rotation? Like, I don't know. We'll find out. So anyway, if we come down, I'll put a chart alarm here. So 2150 is the COVID lows, and then consider adding to EWZ at $20 and maybe put in a zebra trade. So I'll do it. That would be either I buy the shares or I do a synthetic play where I can take a fraction of the cost. So let me actually see what a zebra looks like right now on EWZ. EWZ, if I did I would consider like a leap on this one. I'm probably not taking this trade, but if I went out to January 16th of 2026 and I were to buy, let me flip this option chain. So I have shares at $28. Ugh. So if I bought it at 20, my break even is 24. If I did a 70 delta, so I'd buy that and do that twice, and then I'd sell a 50 delta. and I do that once. So the 25 I sell once. So that's a delta trade or a zebra trade, and that gives me basically a 100 delta long, and so it's basically like a synthetic trade. Now I could have the market right now for this would be it cost me $784 to reflect 100 shares long with a full 100 delta. That's kind of the beautiful thing about this. So it's in the money. It's still trading like a 70 delta, but when price goes up, or if price goes up, as this increases, I'm running it as if I had the shares outright. So it's a synthetic way to take the trade. It's cheaper because rather than putting in $2,000 cash, I can get the same type of reaction by the market by only putting in $786. So that's why I like the trade. I just have to believe that we're going somewhere directionally, because obviously if I'm long an option, I want to see direction. Okay. All right. So anyway, that'll be something into next year if I like it, if that chart alarm goes off. Let's have a look at Mag 7 today. We'll go into some currency here in a little bit. I see your question on dollar yen. So Apple is, coming back a little bit today. Fine. We're not at all-time highs. Amazon got hit pretty hard this week. We're still chopping away. I still have some protection on Amazon. I'm prepared for, maybe a little bit more downside. I still do like Amazon. I mean, my gosh, if we pulled back into a 100 or 144 zone, or even the 200, obviously, I'm certainly interested in establishing some dollar cost averaging positions. So DCA. I'm interested in some options. So adding some options, and even doing like, OTM options. So out of the money. So like at the money options, dollar cost averaging, adding more shares, and doing some out of the money income trades. But yeah, I like Amazon. But if Amazon is on sale by 20%, I'm interested, or close to it. Google, pretty crazy rip. All my trades that I have on Google are going to be, out of the money right now. I got into those when they were chopping around 170. Meta, this is a bar count that I'm watching closely. I mean, Meta can probably tap the all-time highs. It's close enough, but I'm hoping based on this bar count, which I can show you right here. My bar count on Meta is 470 bars on the daily time frame. That's a healthy bar count. So not saying that it can't hit all-time highs, but very similar to what I said on Nvidia. I just don't see us going too much higher without having either this go sideways where this catches up, or we actually do have a bigger, correction just to find it. So I don't know, but I'd say best case scenario would be this. Maybe we grind these slightly higher highs, but it's just barely getting there until either this thing catches up and we're so close to it that a pullback is a bounce, or we have a I don't know, or we have a high low, lower high, lower low, and then we're talking, getting some discounts. So I will be waiting on that. Microsoft, I'm happy I took profit on Microsoft. Maybe not a bad spot to get in, but I'm going to try to get a 410 level again. So maybe this is me being hopeful, but high, low, lower, high, lower, low. If that resets, try to get back to these highs. But there's some pretty good range levels here. So if I get up to these highs, I'd probably establish some positions around the 410 handle. We have that August 5th bottom all the way back around 390. So I'd say between 410, 390, I like that spot for Microsoft. Netflix, 907. Again, pretty big bar count. It's like 290. It's not an Nvidia, it's not a Meta, but are we going to get to $1,000 before we have a pullback? I don't know. Maybe. If it goes to $1,000, it's going without me. All I have are income trades. So I'm hoping again that maybe it's a little sideways here. And is that enough to just? I don't know. I'm probably not going to participate at all-time highs. If we get pullbacks, I'm interested. So high, low, lower, high, lower, low, I'm interested. Okay, any lower than that, I'm very interested. But if it is $1,000, it's that little upside for me compared to the risk of the downside is just not worth it. So probably going to stay out of it for right now. Nvidia looks like I'm not getting my assignment today if it stays above 130. It's okay. I'm still making 250 bucks a contract. It's fine. This one I can still look at next week and maybe consider some ownership, or that might turn into profit as well. Tesla 441. I know Nick's got a cover call at 420, so he actually might get the shares called away. This is out to next Friday, I think, for Nick. So yeah, we'll see. I mean, we're bouncing back today on Friday. Berkshire threw in a position. This is a 415 by 410. This is a ratio spread. Should not be an issue. I mean, it's going out to Q1, but it should be an income trade. There's only like a 10% chance of getting assigned. If this thing just chops where we have a 144 moving average and it moves up a little bit, moves back down, I still like this one a lot at the 200. So it's still way out of the way from my price. But if it goes up, obviously we're going, maybe back up to the highs. Look at your chop. Look at your levels here. Maybe a broadening pattern on Berkshire Hathaway. And a lot of trades like this, if we see broadening patterns in 2025, it's going to be a trader's market. It's going to be a trader's market. So a high to low, high to low, high to low, like that's a tricky pattern because all the buyers get all excited about all-time highs, but it's one of those odd situations where momentum isn't there. It's like every time you get a high, it's a fake out. Every time you get a low, it's a fake out. That's a good trader's environment, but it's a bad momentum environment. So I do wonder what 2025 is going to give us. Okay, bonds, 10-year, a little bit of a downward move, but we've had, I mean, this is nuts, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 7 huge bullish candles. One that doesn't even count. It's a little red sliver there, and then today is slightly down. I'm still very skeptical of where this thing goes going into 2025. Unless this like sharply comes down. And by that, I mean, like, look, the Fed's down 100 basis points from that point, and this thing is still, 70 to 80, 90 basis points higher. That is my concern. So if we get like a sharp retreat in the 10-year, that would be pretty nice just as a consumer. But something tells me that this makes the equities market get very, very top heavy. It broke the market once at 5%. Anything higher than that, we're in for a lot of pain ahead. It's just I don't know. But we know the market can kick the can down the road for a while. But if this stabilizes and comes back in here and goes sideways, okay, fine. Maybe it's not going higher necessarily, but man, the 10-year's been just the complete opposite of the Fed, which has been frustrating. So bonds are still down, and bonds made fresh lows, right? SHY made fresh lows on Wednesday. They're fighting back a little bit. I'm sure there's some bond traders out there that are liking this and like, oh man, I'm so excited about TLT. It's like, I'm not. I still think something breaks. We've been very, very lucky and fortunate to have this, soft landing / no landing. And I don't know that we can always sustain that. I think the market can give us a break. I think the bond market's probably the closest thing to be a break. The bond market would probably break well before the equities market. Just my thoughts. So if the bond market is going to continue to wreak havoc on the 10-year yield and go higher, and bonds continue to hit fresh lows, that is going to weigh heavily on stocks. So just saying. All right, what else? I saw mortgage rates went up. Congratulations. Now houses are more expensive and your interest rate's higher. Cool. What else do we have here? 19.5% of S&P stocks above the 50 moving average. To me, this is a better indication of a buy signal if we get into the like $11 to $10 spot. That tends to coincide with at least a buying opportunity. It's not there yet, so I'll be a little patient. And this is above the 200 moving. So we have, I mean, you can see that this whole buy zone we've seen with about 70+% of stocks above the 200 moving average that is quickly eroded. Right now we have about 52% of stocks above the 200, but they're clearly getting challenged. So if you think about the crossovers like the 50 and the 200, if you have only 20% of stocks above the 50-day, well, it's if price is here and price is crossed over, you have a 50-period moving average and you have a 200-period moving average. This is showing that most stocks right now are in correction mode, right? If they're above the 200 but below the 50, that is correction mode. Which is also why for capital that I want to deploy, I'm waiting. Because if we go into correction mode, we go from correction mode into potentially bear market, which would be, index wise, if we hit 20+%, that's bear market. If we hit double digits, 10%, that's correction mode. You could argue for the S&P or the Qs, like, even 5% is correction mode, 7% is correction mode. But anything like double digits is deep correction, bear market's 20%. So a lot of stocks in correction mode right now. So that's why I'm being patient on where this kind of all settles out. All right. And then this one, what I add here, here's the NASDAQ. Okay, so about 33% of NASDAQ stocks. Again, there's only 100 of them, but 33% of the NASDAQ above. If we zoom out here on a weekly, kind of get an idea of, when would it be appropriate to add some exposure on NASDAQ? Once we hit these, really it's like $10. So I'll put $10. It's a pretty good indication of, stocks are beat up. Let's see how this plays out, and also to the upside. I actually am surprised that for a bit of a sell indicator that we weren't quite there, but this is also just a showing of Mag 7, right? We didn't have, 80% of stocks above the 50-day moving average. Okay, fine. But it wasn't like every stock where that would be like a warning sign, because it wasn't every stock. It was just Mag 7. There's still a lot of unprofitable tech, unfortunately. But anyway, let's look at some of these recent bottoms. Okay. 2024, April. So that was, we had a sell-off in the market in April of 2024. It was like a 6 or 7% dip in the NASDAQ. So that was an opportunity to also buy. Back here in October, November 2023, great opportunity to buy. Okay, back here in October 2022, that was the bottom of that bear market. Great opportunity to buy. So yeah, it's a good indicator. That's it. All right, let's go to some currency pairs, and I'll start wrapping things up here in a little bit. Let's go dollar pairs first. Okay, Aussie dollar. Let's go to the daily chart. Like I said, I am willing to kind of ride out some of these. I do want to have a chart alarm. So if this dollar comes back and fills a pocket, then perhaps I can get my Aussie dollar out. So this is entry 1. Let me use a black line here, or an arrow. So entry 1. Entry 1 at that line, entry 2 at that line. If entry 1 comes back in a profit, I'm just going to take it. Take profit on entry 1, take profit on entry 2, and net positive, and then be out. So I'm not looking to necessarily fight the dollar, right? And if I don't get it, like it just comes here and it's like a little tiny bounce, then it sells off more and sells off more, fine. I'll take on more. I'm going to buy another little chunk at 60.20. Okay. So yeah, it's good. New Zealand dollar. New Zealand dollar, I am in level 2. I didn't get filled in that bottom spot yet. So 56.05 didn't fill. My bottom from Wednesday on this one is 56.20. I got a 56.05. So I could still get filled there. But right now, same type of thing. And I would say this, a profit target was going to be 6,000 to 60.50. I would be okay with this one getting back to profit. So if somehow this comes back into profit, comes back to like 58.50 or 58.60, I'll just take a break even here. So I'll just close that for a small gain or break even. And then this one's a winner. And then I didn't get filled at the bottom. So I'll take the profit. But I don't know. If this is just more to come and we've gone from, roughly 63.60 all the way down to 56, it's like that's a 700? That's a 700 pip move on the New Zealand dollar. Could it go further? Yeah, we could go. 1,000 pips on this currency pair would be big, right? If we did 1,000 pips and we sweep these lows, I think 1,000 pips would be a run, and then we start to bottom out, and then we start to get a move back. So I'm still willing to take on a little bit more heat. Could it be, all the way down to 5,000? I would hope not, but it could definitely be like a little manipulation of these lows. So I'll watch for that. But hopefully we just come back in, rebalance, get a break-even trade, take a small profit, and don't have a huge drawdown. Okay, or at least like pip-wise. It's not the percentages in dollars because I trade pretty small in Forex. All right, dollar CAD. I think I'm just gonna. It's like, do I take the profit? Should I take the profit? Does anything change on dollar CAD right now? I mean, my max profit was like 320. Yeah, I mean, I still got another $100 here. I mean, that translates into a pretty big amount of capital. It's like a 50 multiplier for my copies. So if I get another $108, yeah, I mean, it's another $5,000 if I just let it hit my profit target. And I still think it's very possible that we not just hit the measured move, but also get into this like 4,600. This is the 2016 and 2020 highs. So I'll just hang in there. I don't know. I'm going to be pretty mad, obviously, if I see this thing like really pulling back. So time will tell. All right, dollar Swiss. Dollar Swiss. If we get any pullbacks, I want to add to it. Trying to get this one to 92. Dollar yen. I don't know. You know, honestly, it's like the easiest trade for me on the dollar yen would be we have this high that the market should have some type of care about, and we have this low, right? That was a bear trap low. This could be a high that the market respects. You know, could this market set us up? And this would be a really nice pattern. I don't know if it's going to happen, but if we have this as a swing and then the market sets up some type of pattern here, wouldn't it be nice to have a nice technical trade in the yen and take a swing out of this? Yeah, it'd be nice. But something tells me that we could have, you know, this and this and this and all the way back to the highs again. And it's a bit of the carry trade. And then this whole thing, just a matter of time. But if we end up making a bull trap up at these highs and then we fail, does it come all the way back down? You know, is 2025 going to be another deleveraging on the Japanese yen? Maybe. I don't know. So I tell traders, if you're trading the Japanese yen, just don't trade higher time frames for right now unless the pattern is so obvious you take a swing at it. But otherwise, just stick to an alignment. You know, get a 1 hour, get a 15-minute chart, get a 5-minute chart, and just freaking scalp all you want. You know, if the 1 hour's up, then you look for the 15 and the 5 to be up and you scalp it. I mean, I've got robots that can do it, but I don't trust the technicals of the Japanese yen that often, right? I think this is a currency pair. This basket behaves a lot more fundamentally than it does technically, you know? And I can see people argue for that because yes, over the years, there's been great technical trades on the Japanese yen. But the problem is those technical trades take months and months and months to set up, which to me is not trading, right? Like you're waiting for a technical trade to set up. And to me, that takes a long time. If you're trading anything technical, it's like, look, your momentum is up, so stay with it, right? So stay with it. But that's it. I really, outside of this range, which I think is a pretty key one, like that's a big range for the dollar yen. So either we still see more of the same where this gets all the way back to the same resistance level, or if there is something here, then maybe there is a swing. Maybe there is a head and shoulders. Maybe there is a breakdown. But otherwise, I just expect the range. So I'll watch this level. I'd be interested in selling high if it confirms. Or if I get like a swing pattern in here, I'd be interested in taking a stab at it with a defined risk trade to the downside. But right now, nothing. All right. Any other currency pairs you want to take a look at? I know we had some decent moves. We'll go to a currency strength. Currency strength is a little messy today. Wow, look at that from yesterday. Japanese yen, crazy week yesterday. Was that? Oh yeah, they didn't do anything to policy, did they? Should not have. I'm assuming they kept it the same. Yeah, still the same. So they didn't do anything. So monetary policy statement, I don't know. They had stuff to say, but that was the Japanese yen on Thursday. That's pretty weak. Okay, and then today, a lot of chop. A lot of chop today. All right, any other questions? Otherwise, I will leave you with this. The market's, you know, buying the dip, I think. But when I say that, I don't know if there's enough. I mean, anything can happen, right? if we get to all-time highs again through the Santa rally the next 2 weeks, I would be pretty surprised. It can happen, but I am pretty skeptical of the sustainability of that run. If we get all the way back to these highs, something tells me that that is a bull trap waiting to happen, and then we have another flush coming. So just be prepared for a little bit of chop and a little bit. That's a lot of volatility, obviously, if that's what happens. Otherwise, this is the high to low that kind of was the initial flush, and then any type of rally here is going to be faded back down into maybe early to late January. All right. And if the market just gets the cleanse and purge over with, that's good. I'd rather have that than the market just trying to do everything it can just to fight and fight and fight and fight and fight. It's like just fall, just find a bar count, just find some levels. It's like I don't know. I'm not saying the market has to crash. It doesn't have to be like, the sky is falling, but I'd rather see an opportunity where we get some really, really good levels to buy. But I suppose it's like, yep, this could just offer dynamic support, dynamic support, dynamic support. The market can go sideways a little bit, and then it just does what? More of the same, So we're going to see what these bulls have. If they got some fight in them, then we'll see what this true Santa rally looks like. But based on that FOMC, I think the market is going to struggle to get all the way back to the FOMC candle. So we'll see. But still watching hedges, still watching positions, up on the day, and interesting week. So now it's going to leave us with this long wick, right? Look at that trade. So the candle itself, and I looked at this first thing this morning when we opened. I was in an earlier session. I was like, this candle is one of the largest candles we've seen all year. It was percentage-wise, it was equally as big as our April capitulation move. And it was a little bit larger than that post-Labor Day sell-off. Obviously, we had a much bigger sell-off in August when we had that August 5th bottom, but the issue was that was a Monday and it just ripped all week. But, our big correction was July to August. Everybody knows that. If you're summing up 2024, that's it. Little hiccup in April, big volatility scare in August, and then everything was just like, yeah, Super Bowl market, AI, semiconductors, Mag 7, can't be stopped. And even with this FOMC, it's like, okay, well, the market fought back. Is it enough? I don't know. We'll see. All right, I'll let you go. Have a great Friday. And next week, I'm not sure what the schedule looks like for next week. I will be Monday should be fine. Limited hours trading on Tuesday, the 24th. I think brokers close by 1 p.m. in the equities market. Forex might be open, but super low volume. Trading is going to be a little light for the next couple of weeks with the holidays. I am probably out the 26th, 27th. We've got a baby on the way, and 26 is looking like the day. Unless it's earlier, then I'll let you guys know, A1 Trading and everybody. But we'll find out. So, all right, have a great Friday and a great weekend. And I'll see you Monday. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.